Okay, I think I'm on, but let me go here. Actually, video. Nope. Oh, why is it not? Sorry, you guys. Let me set it up. I could never figure this out myself. Okay, I think I've got it. There has to be a faster way to set this up. Hey, every show has their own thing going on here. Okay, so I have the chat up here. Now I have not been on for quite some time, so I don't know if you still anybody's still here knowing that I'm exist. I've been back. been back. Okay. All right, so it's all set up. I think I am ready to go. Ready to go. All right, so nothing much here. Of course, just talking about GameStop again, right? Now, within this couple of days, it's been a terrible busy for me. This personal life, and just got a new puppy too. So, what a handful! What a handful! Try to train her to, be housebroken, but she's 6 months old, so she's not gonna be housebroken anytime soon. So I wish me luck. Wish me luck. I think, yeah, everybody wants a puppy now. I mean, I was watching Moran's too. Like his dog was so cute, Tito. But yeah. So anyway, it's just a little bit of personal time here on live. But okay, so let me just look at GameStop a little bit. Of course, nothing new here, right? Like I said. But if you look at their website or their Twitter account and all that stuff, they are actively, trying to find the most popular something, right? Which album, just again to try to acclimate all of those data, shoppers, right? And this is going to be useful one day when they're trying to develop a product for people to buy into, right? You want it to be popular. You want to see, okay, who knowing your customer type thing. And this is why it's so important for them to kind of take some times to gather the data instead of just, buying something to sell. And when it's not selling, you're losing money in the end as a company here. So leadership has been doing everything they can to increase, revenue stream in the right way, right? Without breaking the bank to do so. Although we are a bank already, right? We are $4 billion, just like my title is saying. Nobody knows that we actually have $4 billion yet. How do I say that? Well, only people in the know, right, that are following the company and going through, the due diligence of the company, following, what is going on with the company, right? Now, of course, the news media doesn't want to highlight that, even though they know that we have been raising money, capital, in order to, merger acquisition or just, again, put it in a marketable security. So I'll go through all that later on. But I wanted to see this one real quick here. Of course, they just had July 11, sorry. They just have 40 years, celebration for GameStop. So that's pretty cool. And of course, they have this EA game here. Sport based, usually I don't play this type of game, but all of that stuff too. Now that's kind of tied into, the trading cards, sporting cards, and all that stuff, and people that the company actually sells. So again, they know their customer very well, and to try to bring more in bring people more into the store for different reasons, right? Well, especially like, I mean, you could say that these type of trading card is speculations and all that stuff, but hey, just tame tame your judgment a little bit here, because they're trying to make money here. Okay, so, and then, they have a lot of other news here. Nothing much, very boring stuff here to have to go through. I know, like, sometime investing has become one of these things where you have to hype things up in order for people to be interested in it. And this is the downfall of our generation, right? For my generation, I'm going to speak for my generation here. It's like, if it's not exciting enough, people are not gonna want to kind of pay attention to it, even though it's like beneficial for people to do so. It's only a soundbite. It's only like reading the top, what is it? The title of the article instead of reading the whole article, or going through the earnings. Like, for example, okay, let's just go this.
There are additional other casts they may have, maybe.
Sorry. And I'll show that one right now too. And so when good news ensues, just like the fact that we have $4 billion, it hasn't seeped through, the consciousness of people yet, because that's not too exciting for them, right? At least that's the impression that, because of the price actions and all that stuff, it doesn't excite people quite yet. And to me, this is the best time to buy. Okay. Again, this is my opinion, not any other people's opinion here. Okay. So let me go to here. Now, I always bring up the fact that I'm pretty proud of myself, actually, like that I was able to accumulate down here as well. Of course, I wish I had more money to put into this one, but I could only do so much, right? Because my income, right? It's not a gazillion dollars like most people here, or most people. What is it? My income is not that much, so let's just stop it there. don't want to reveal too much. But yeah, my income is not enough to even survive in this country. In this. I could say in this country, but because I'm able to kind of like have a lower expenses because I live with my parents here. And so it's a very, easy for me to kind of like, okay, even with this income, I could save as much as I can. But of course, you make a choice to kind of not going out to eat and all that stuff. And I'm pretty good at saving, if I must say so myself. Anyway, I'm just babbling. So let's just go into the price action here, right? So my point is that people has not been seeing this price before the run, right? They have not known the fact that this particular earnings, right here, was a good earning, okay? Because the news media has been kind of bombarding it with the terrible news, like, oh, double miss, look, 25%, look, 12%, down from revenue. They only want to point that out, but never have they pointed out the fact that GME was earning $60 million, okay, the quarter before that, right here. So, and when people see this, even the people with good math skill, right, would be like, oh yeah, they earned this much, but why was the price of the stock went down from 15 to 10? It makes no sense, right? Because again, the only thing that they could do to create negative sentiment at this point in time is to cast down the price, drop down the price to create fear, right? And how much was it dropping? So look at this. The amount of percentage that was dropped would scare anyone away, right? And this is the point when people were laughing at Moran's rant. Remember, this is the point where Moran's was doing a 8 hours live stream here, okay? And again, let me go look back to the history here because I've been there through all of his live streams, so I know. And then, you have a lot of people was so disappointed on what? On good earnings, actually. But because, look at this, so 35% down from $15 to $10. That would scare the bejesus out of anyone, right? And think about it, like, again, they were profitable for the first time in 6-7 years. For that quarter, that's a monumental milestone right there. Now, as an investor, I know this fact, and this is why I was like, oh, okay, if you want me to buy more at a lower price, I will do so, right? And of course, within these 2 months, right here, within these 2 months, you see, like, okay, not even two, so 3 months. So let's say it's 3 months straight. Within this, right here, from this time, you know what, let me mark it. Because it's important. It's an important point to hone on. And I promise you, it's gonna make sense in a minute here. Okay, so from here to here, right? Okay, so from March to May, March, April, and May, 2 months straight. Okay, people have been making video attacking Moran's rents, right? You have those noisy Korak guy, the trench coat guy, Tony De Niro. Everyone has placed in, or even Hannah Reloaded, right? Even Hannah Reloaded came out of nowhere. I'm sure she probably, have her own sentiment here, but they always come and say something when it's down like this, right? Without knowing, okay, what is happening behind the scene. For every stocks out there, there are companies behind it. So what is the sentiment right now at this moment in time? The sentiment was the company's going under. The company's losing revenue. The company has a leadership that doesn't know anything. Ryan Cohen doesn't have any plan. The reason why he doesn't tell us anything about the plan is because he doesn't have any. Okay, he's a dog that catch the speeding car. This is what Michael Proctor is saying about Ryan Cohen. Now, to me, it's just a baloney. Like it was a onslaught of negativity in order to cause you to say, yeah, they are right. I'm so tired of holding this. It's down 50% again since the earnings right here. Yes, and I'm sure most people lost a lot of money buying call option at this junction here. Okay, now, of course, for me, I saw that too. But at that time, I was like, okay, this is incredibly stupid. Why would the price come down when the company's doing better? And why would these people try to tell or convince you that it's gonna come down to even single digit? And I'm like, okay, it might, but hey, this is a good price point to get as any other price point. If I've been buying heavily up here, why wouldn't I add more down here? I mean, to me, it's a no-brainer right there, right? And to me, I was like going through book value, right? At this price point, I was like, okay, at the very least, book alone is 50% equity, okay? At this price point right here, 50% equity, okay? And then, when they're over here, of course, after they release the preliminary earnings over here, they were raising money close to this price point right here. So they had some share dilution. I don't remember when they announced those offerings. I think it's probably around here. They were announcing the offering. That's why the after hours went down. And that, again, anytime they announce anything, they always do that stuff. And so, and then they make an announcement down here as well, right there. So again, don't quote me on the date. I'm probably wrong about that. But my point is that they had been doing a lot of dilution at that point. Hey Carter, what's up? Be more listener while working. Okay, sorry. don't waste your time, Carter. You know all of this information already. So you go and work and make some more money to buy some more GameStop. Okay. No, you're good. You're good. So appreciate you coming in here. So yeah. Okay. So let's see. So they were able to dilute, a whole bunch of stock. But what was the news saying about dilution, right? And of course, like traditionally, and even people who are evaluating the company, right, in the traditional sense, they would always say, "Oh, dilution is bad." Like, "Oh, it's so bad that." And typically that's probably right for most of the company, right? Because the other company, you have the executive who doesn't benefit shareholder. So anytime that dilution happens, it goes towards the executive. Bonuses, loading more debt, leveraging those assets even more to try to get that, capital to lever up, right? I mean, case in point, AMC, right? It's a perfect example of how dilution is bad for that. And guess what? Was, what is it, that guy, AMC Bigham, say all the time, smart dilution. It's a smart dilution. It's the opposite of smart dilution because it doesn't benefit shareholder, right? But in GME case, you could see it numerically. I can't even say the freaking word. Numerically, okay, that it is beneficial to shareholder. You know how I know? Well, shareholder equity increase, right? That's how you determine what is good and what is bad, right? It's based on the data in front of you. You got to do the calculation yourself because nobody else is willing to do this calculation for you. You see this? This analyst has been the only analyst out there for GME right now. The only analyst. But again, I point this out all the time because this is a perfect example of what it's like to always trust these people to do the to do the analysis for you. And when you trust those sources, you're gonna live and die by this source right here, right? Especially when it comes to determine what this company is it's all about. Hey, Michael Venuri, I don't know how to say. Yeah, welcome. But anyway, so the determination the evaluation of this company has to come from you. Whoever wants to get involved in this company, you need to do your own research. You need to know how to do plus and minuses, or at the very least, listen to the right person. Okay. Now, of course, you have your own opinion. If you listen to Tony De Niro, you're gonna believe in him, right? If you listen to Noisy Korak, you're gonna listen to him, right? Or trust his source, or trust his analysis, or whatever. My source is always Moran's Rants, right? Because I think that in 3 years he hasn't been inconsistent in his information based on my own analysis, because I've been watching him quite a bit of time. Okay, and so I trust him and the information when it comes to private equity and all that stuff. And so that is a good source of information. That's not to say that I trust everything that Moran's is saying. Of course, I have to verify it, outside of that as well. Is that true? Or is that, what it really have been, playing out? And so every single company that he mentioned that was private equity has the same pattern, right? Loading on debt, just the same as AMC. Heavily in debt, minimal income statement, like diminishing income, right? Increase in revenue, but diminishing in income. Like the opposite of what GME is doing right now. So they would rather use those money to increase the revenue at all costs, even though you don't get to keep the money for the company, for the shareholder equity. So in essence, because people are so lazy, this is just my opinion, right? Because people are so lazy, They only look at the top line revenue. Okay. And now I'm sure it's like true for institutional level of analysis as well, right? Usually, they're trying to analyze so many companies out there that, they would just, it's almost like people who just read the title of the article instead of reading the whole article and try to get the gist of it, right? It's almost like the sound bite. They only listen to the sound bite. So it's the same way people are analyzing this company in the traditional sense. They're so lazy. All they need to see is like, oh, decline in revenue, therefore it's bad, right? They don't even look into, okay, what's happening over here? What's happening over here? What is asset liability is like, right? Asset versus liability ratio and all that stuff. These are important, much more important than the top line revenue, right? Again, top line revenue, like Morantz was saying, this is what I got from Morantz, okay? That top line revenue, it's only factoring in growth, okay? Growth is what you need to see if you want to see a high growth stock, then you want to see top line revenue going up, okay? Now, case in point, let me point out this one right here, SoFi, okay? Now, I've been following SoFi too. At this price point, I feel like it's a pretty good price point. I missed at 10, at 6. Of course, I was waiting for $5. I'm still trying to wait for $5, but it may not come down to that. But I am thinking about accumulating more now. I might buy a few leap option, but again, this is just my own personal, just a couple contract here. Nothing break my bank or anything like that. But if you look at their financials right here, right there, see, their revenue went up tens of percentage, but still the share price went down, right? And so again, this company is growing like crazy. However, guess what? Their net income is still in the negative. This is trailing 12. So they just turned positive for 2 consecutive quarters in a row. So technically, it could be in a place where, okay, it's a good accumulation point. I'm not saying it's going to go to the moon tomorrow or anything. But in a couple years, this is a good company to, chip in slowly as we go. Of course, their profit margin is pretty high here, right? Cash flow. So since it is a bank, I'm not qualified to, kind of evaluate that in my own personal life. But it seems like the profit margin is already been doing well. My point is that the growth for this company is a lot higher. So this is what you want to see when you want to see a growing company, right? However, the net income is not there. So I need to stress that for you guys here. So it's still in the negative on the trailing 12. If they are able to come ahead next quarter, it's going to improve even more, right? And so it's kind of like what GME is trying to do as well. Although we already achieved the net income positive already. The only thing that we don't have in comparison to this company is the top line revenue yet, right? Not to say it's not going to ever happen. Of course, it's going to happen in the future. We just don't know how much more they are able to grow at this grow top line revenue, and it's coming. Again, if you listen to Ryan Cohen, he is very conservative in capital usage. He's not going to use the capital when it's not needed. Okay, and my speculation is that he's going to use a chunk of that to put into the marketable security. Hopefully he's doing $3 billion. If he does, then it means that I have my right here. It means that we are going to be able to do $70 million, right? Wait, hold on. Actually, this one is trailing 12, not quarter 2. So I think what I did was, okay, so I was kind of like do this math right here. So in that, you know what? Let me take this out here because I want to see what my prediction for the second quarter. So second quarter, if we were to do, I think it's doable, right? Because of the marketable security. It seems like every second quarter or so we have interest expenses, right? Plus interest income, actually. That's why it's expressed in negative right here. Hi Sharon, what's up? Welcome. Just going through the same data. I'm sure you guys have known this many a time. So I'm preaching to the choir here, but hopefully, somebody is new to the company would be able to benefit from this. So please don't waste your time. I appreciate the support though, coming in and listen. But anyway, so my projection is that the next two quarter is going to be close to, this is low ballpark actually, $43 million in the plus for second two. It's very low ballpark because that's imagining that we were able to do the operating expenses lower, right, from first quarter to second quarter. Sorry, my puppy. She is such a ball of energy. I'm kind of like not regretting, but she's cute puppy. But anyway, so if we were to do the same kind of like growth, sorry, me, what the heck? Okay, so if we were to do the same, right? If we look at this quarter one of last year, quarter two of last year, right? If I look at the differences, that's when I got to this particular, operating expenses. So again, it's math, right? Again, if they could say, oh, hey, we're declining 20% from here, so they're projecting 20% decline over here, then I could also project a 20, whatever percentage decline for the operating expense as well. Okay, so that's good. That's to me, it's only fair, right? Of course, this is all a projection here. It's not a true number yet. But last quarter, I was kind of within a couple million or so, right? Well, because of the preliminary, preliminary release before they do the share offering. So that's why. So, but anyway, so this is why I hate projection, because you don't know what's going on. But again, I could not help but say, well, second quarter was like, what, $2.8 million loss, and people were up in arms about it. What happened over here? People were telling you, oh, it's a terrible company. It's like they're losing money. They're burning cash, right? Like over here, burning cash. They lose money, nothing changed, right? And then when they're profitable over here, what happened? All of that negativity ensue. Now, of course, all of these, I know it was just a tactic to tell you that this is not valuable, that this company is not valuable because of the stock price is down. That's it. That's all they could attack this company on at this point in time. Right? And so now let's kind of move forward here. I know we're looking backward, but let's move forward a little bit here. I want to emphasize to people out there who just got into this company and thinking that you're going to make a gazillion dollars tomorrow. Okay. You're not going to do that. Now, unless you know exactly when to buy call option and then just YOLO your whole portfolio there, you're not going to do what Roaring Kitty could do. You see what I mean? And so don't think that is going to be your life goal here. But as far as the company go, you need to be aware of this as well. Because, building your wealth is going to take time here. Okay. Now, we all want MOAS tomorrow here, but I think it's going to take multi-years in order to kind of shake these people out. At least the shorter of the world out there, right? And they'll do everything that they can in order to kind of dampen the price of GME forevermore until the end of time, until they cannot hold that dam anymore, right? Until the majority of institution out there own the majority of GME. And I'm sure they're setting up for that already. It's just that they're trying to shake out retail as much as possible. Hey, Lionel, what's up? What's up? Welcome. But anyway, it's a good cue for me to kind of talk about this. You came in perfect time, Lionel. Perfect time. And so now, if you were buying from here, right? Look at this. Now, my personal opinion is that based on the data before, okay, current price, which is $26 or so, $26. It's like you're buying GME at this price right here. The same valuation, actually, based on the book value. Okay? The same valuation, because the world, like I said in my title there, the world still think that GME is at this price point or at this valuation, which means that it still has $4.27 of book value. That's what you see in Google. Google doesn't tell you yet, right there, right? I make a live stream about it too if you want to kind of show the proof here. And so there is a delay in news, okay? Which is where I am going to show you this one right here. Now, this is Warren Kitty explaining how delayed the news could be. And the market usually does this thing because, again, there's a lot of people who are out here are news to the company who thinks it's a short squeeze. Who thinks it's going to MOAS tomorrow or next week or next month or next year, whatever, right? Whatever it might be, the time frame that you have is kind of like bogged down by the news cycle, right? Again, the news are here to mislead you to do something, okay? And so don't listen to that in a sense. If you know how to do plus and minuses, that's all you need to do, right? In terms of knowing which price point is a good price point to buy into, okay? Now, for me, I have my price point that I'm willing to add, right? I show you my strategy before. And so for those of you who've listened to me before, you know that. And so currently, because of the book value increase, it used to be $50. Now it's going to be $100. You know why? Because it's the book value increasing. Again, $100 is a 10% equity of when it comes to book value. So that's why I got it like that. $50 is a fair value because again, Best Buy is trading at 5 times to book value. So let's listen to Rowan Kitty over here. Of course, this is like years ago before he was famous, right? He was just giving you the thesis here, but I think it's still relevant till this day. So let's listen in.
There are additional other cash they may have, maybe freed up to do other stuff. Any number of things, right? They can use it to. Oh, I mean, we like to think that they bought that stock already, but we're not so sure, right? But they could use it. Any cash that they have, it's a little bit fungible, right? Maybe not this credit facility cash, but I believe a good chunk of their cash is fungible, and that it can be used for any number of reasons. In that they could use their stock buybacks, bond buybacks. They could, in theory, as the cash builds up over time. I mean, we talk about what's GameStop going to do over the next 3 months, 6 months, 9 months. But really, the super bull thesis with GameStop is 5 years, right? So as this cash builds up, yes, the stock buybacks, yes, the bond buybacks, that's going to influence the short-term moves. But the huge, gigantic GameStop bull thesis, in what I think Cohen is more interested in, is that 5-10-year plan, where they reinvent the business model, right? I talk about that on the videos over and over. And so this is the thing: as this cash builds up, and they get the current cash on the books, but
no, he said 5 to 6 years business plan. Okay, so this was 3 years ago, right? Or 5 years ago? I have no idea, but I'm sure you could go to his channel and kind of like look into it. how long ago was this, but he was always here long term, and this is what people don't realize. And then the news only showing him as this somebody who just got lucky, and he's been building this position for years and years and years in order to get to where he is today, which is 9 million shares of GME. That's ridiculously high for a, retail investor. And he's like us, right? People who just like know all the publicly traded information here, not no Congress, inside information, nothing like that. Anyone has the availability to do this research yourself if you are looking into it, as thoroughly as he did. Okay, so it's ridiculous to say, oh, Roy and Kitty, got lucky because, there are so many stupid people who are willing to hold this company for a long term or buy at any price or whatever, right? Again, they completely not understanding what's going on behind closed door, right? There's so many layers to this company that it would make your head spin if you know the truth about this company. And this is why I feel like I'm such a crazy person sometimes when I talk about GME to people who I know personally, right, at work. And, I tend to joke around a lot when it comes to like GME, because I know that nobody would believe me until it's already blown up already. And I'm sure back then, for DFB, nobody believed him. People were saying that this guy is stupid for buying into GameStop at this price. And so again, he took an enormous amount of risk. Yes, it paid off for him because, there were enough people believe in his thesis and followed, suit, right? And of course, also, it was due to the market structure as well, like how market maker has to hedge, has to at least, if you sell a lot of call option, you're going to have to go out and buy the actual share eventually. If people wants the share, right? Exercise to get the share. So again, that's just a market mechanic over here, but it has nothing to do with the fundamental. However, he did talk about the fundamental of the company as well. So there's a hybrid over here, right? And I'm sure if you watch him, before, you probably know that he is he combined, right? His thesis is, to be a long-term investor as well as using chart to kind of like buy when it makes sense. Buy when, the technical tells him to, right? And so I think this is why he's able to kind of time it perfectly. Now, I don't know how he does it, but I mean, the results shows that he's actually doing the work himself, right? Of course, like there's a lot of speculation out there that he has somebody behind him. I mean, I don't believe that because there's no evidence that he has. Think about it. If these people have evidence that he has somebody behind him, and he's not just a regular person who knows this information and who are incredibly well versed on those information and kind of like able to kind of extrapolate it well by himself, they would have put him in jail already, right? And it's sort of like, it's been 3 years, they have not find anything, with this guy, that he has somebody working behind him, right? So again, they have no evidence whatsoever. So this is what confirms to me that he's just a regular person. It's his own money, and how he's able to amass close to $1 billion. Well, he's just doing this. He's shown all of us that it could be done. He turned $50,000 into $34 million. Okay, in 5 years now. Again, it was a leap option that he bought at a cheap price, very cheap accumulation, $50,000, YOLO or whatever. You could go back and check those. Right? The history is there for people to go and find it. But to say that this guy is like somehow, crazy and it's just like, or good, lucky. No. It's not about luck here. he has so much work. But anyway, so let me go back. Sorry, rambling on here.
More interested in is that 5-10 year plan where they reinvent the business model, right? I talk about that on the videos over and over. And so this is the thing: as this cash builds up, and they get the current cash on the books, but in the free cash flow they generate over the next 12 months, they're going to have this balance sheet to subsidize this vision, that whoever's vision it is, whether it's management's vision, which we presume it is, the board's vision, if Cohen has a new vision, assuming that's even his play, they're going to have the cash to do it. They have the cash to do it. So this credit facility is important because they should be fine come the con. So this was a concern 3 to 6 months ago. People had this concern prior to the bond exchange. I mean, solvency risks, liquidity risks, people talking about bankruptcies. I don't understand. That's off the table. I've been saying that. I've been thinking it for a long time, right? But there's no case to be made on that front. So this is people, like Harsh was just saying, the stock needs to be repriced accordingly. And what happens is, in theory, if it were a perfectly efficient market, right? This is EMH. It should have been happening. It should have been happening incrementally over time. A slightly positive, bullish news release. The price should gradually move up, and then it should kind of get toward fair value. But that's not how the market works, right? That's ridiculous. The market doesn't work that way. The market kind of it takes time to digest stuff, and what happens is the market wakes up one day. They're like, "Oh shit! Oh, did we miss that bull thesis? This whole time we were focused on physical versus digital, blah blah blah, and the data. We missed this huge upside on GameStop reinventing itself, or they didn't take it seriously enough. And what happens is that's what I'm talking about, the inflection point. It feels like it happens overnight, but the thesis has been the same. It's been the same. It's not like without Ryan.
So he's saying it's been the same way, and this is true now as well. If you look at this right here, this is why I point out this price point right here. The company has been doing much better a year ago. Right here. Right here. Beats. Actually beats here. It's just that the bar was raised so high for the company to even get into positive, even though, like I said, profitable for the first quarter, right? Or something like that. Like a lot of, what is it? Profitable for the first year, for the first time for 7 years. I think I made that point very poorly, but I hope you understand what I'm trying to say. Is that the company is doing better, much better. But what happened here? What happened? The price just dropped like a rock. And again, this is all they could attack the company on, is on the price action, right? So on average, if you were to do I think there's a channel here. Oh man, is it ruler? No. Let's do from the high of this particular run, right, to the low. What is that? That's 64% drop. Anyone would be like, oh my God, my life saving is gone. Oh my God, my investment. Oh my God, GME is a terrible company to own. Look, it's always coming down in price. So again, psychologically, this is all they could attack GME as a company on. Very, very common as well that people are going to be like, well, since the chart is telling me to sell, I'm just going to sell anyway. Okay. Well, again, but you might be able to you might be missing out on this, right? Oh, you could wait. Yes. I'm not saying that it won't come down to here ever, back here. That might be a last ditch effort to try to, shake more people out of this company again. But the news has not been, or the market has not been pricing this company right, even till today. Like I said, this is why the world only know this number yet, right? Because the next quarter has not happened yet. Okay. So if you look at this one right here and go to the right here, see, shareholder equity is still at this price point right here, which is the book value. So if the world just know this piece of information, even after the dilution, after the everything, they are not necessarily going to see this right here. Hold on, let me see. Let me shrink it down a little bit. shoot. I think I have this the wrong way. But I made a video about this already. So, but this is before dilution, right? This is before dilution. So before dilution, of course, the book value was going to be 4.27 right here. Book value is $44. Now, what is the book value? It's $10, but it hasn't registered in this particular balance sheets yet because it hasn't been accounted for yet. It hasn't been calculated. And if you ask Google, Google will tell you the same thing, where book value is 5 times its book value, or price to book value is 5 times instead of 2.5. And this is why I do my own calculation to know the most recent price point here, or at least most accurate, most recent, most informed decision about the valuation of the company, right? The news is not going to tell you good things about the company yet until they are accumulating it to the max, until they're ready to send it off, higher. And it will happen. Just like Rowan Kitty was saying, that eventually people are going to wake up and see, oh, we've been focusing too much on the revenue coming down, right? We've been focused too much on the fact that Ryan Cohen doesn't speak to us, okay? It's like, and we miss on the actual valuation of the company, the actual value of the company. Value should be the most, talked about, because now we have $4 billion and people scoff at $4 billion for some reason, because NVIDIA is $3 trillion? It's like, oh, NVIDIA is better because it's 3 trillion. Okay, sure. Go ahead, buy it. If you want to buy it and make money, go ahead. Good on you. If you make money on NVIDIA, congratulations. But as far as me starting a position in NVIDIA right now, no. Actually, full disclosure, I do have a short position on NVIDIA. And so, and I'm not saying that I'm trying to, discourage people to buy into NVIDIA or anything like that. If you think it's valuable, then buy it. Like, I'm not the one to move the market. Like, I can't. I only have a couple $1,000s. How can I move the market? It's ridiculous, right? And so, call it a market manipulation because you don't like a certain company or like a certain company. Crazy. But anyways, there's bigger fish to fry than that. If you think that I'm, manipulating market in some way to say people, oh, don't buy NVIDIA because it's so expensive already. Again, my opinion, obviously. I mean, if I look at the valuation, people would tell me, well, GME is the worst company to own because of PE ratio, right? Look at the PE ratio right now, right here. It's like $300. I mean, 300 times its PE ratio. Okay, well, you might have a point there, but last quarter, guess how much it was? It was 1,000. Okay, so the fact that it's like, again, it's skewed. Why is it skewed? Because we've been in a transition. So is it complete yet? I don't think so. I think we need 2 more quarters to prove to these people that we're doing much better, even better than people expected. And so again, there's a delayed, people are not going to find out until a year later, right? And so just be aware that the price action might come down even more, even though it doesn't make sense. Just know the fact that, hey, the valuation right now. You know that currently book value is $10. So if it goes anywhere close to $10, okay, if it goes anywhere to close to $10, what is going on? What are you going to do? Are you going to sell because it's used to be 26, now it's 10? Of course not. Why would I sell at $10? Even at 20, my thought is that they might try to drop it down to 20, right? And again, this could also happen. Why? Because there's a gap over here, right? GME has a funny way of filling gaps, okay? Eventually, this might happen. But just know that the company is doing better, right? When this is happening means that, and I need to emphasize this because people might forget. So at this price point, okay, at this price point, you would be stupid not to buy into GME, right? Just not to say that you're stupid. I'm just saying I would be stupid not to buy more. There you go. This is a better statement to to say, because it's 50% equity. Okay. Oh, sorry, 50%. Sorry, I should say 50% equity at this current valuation. Okay. It's much the same way as you buying over here. Okay, before the dilution, before the value added share dilution that comes from the capital raise, right, by GME. This price point right here, okay, it's the same valuation. Okay, again, it's a no-brainer then, it's a no-brainer here, and it's still a no-brainer currently here as well, right? Because currently it's close to what? 30? 30, okay, let's do that math real quick. So 26 divided by 1042. So that's the book value. And if you kind of flip it, that's 40% equity at the current price point. So it's still a good valuation, in my opinion, right? Again, so what is that? Sorry. So at this current price, it's 40% equity. Meaning that you get 40% equity in the company, GameStop. If you think company is shitty, obviously, go ahead and wait until 50%. Go ahead and wait until you get 70% of this company. Okay. There are people who want you to think that GME is only worth $11, okay? But keep in mind, these people are shorters, okay? They're known shorters of GameStop. So therefore, they want you to think, the public, to think that GME is only worth $11, right? How do I know that? Look at this analyst right here, just like I showed before. Okay. There we go. $11 price target. Now, at $11, guess what? They want you to think that this company is so bad that the only way that they would pay for GME is 100% equity. That is incredible amount of value right there. And my point of view, I think my thought about that is that they think, well, they're so entitled, right? And this is true about, the institutions, people are like well connected, that they so used to buying company at, below market value, okay? Below market values to the point where they will not make any move if it's not the right price. And so with this company, they have not been able to convince people to sell at this price point, right? At $11 over here, even before the dilution, that they're gonna be forced. And they hate it. They hate the fact that they have to buy GME at this price. And again, this is why they have not closed. They have not closed, in my opinion. Right? In my opinion, I'm just, I have no data to back up my claim here that they have not closed, but just my deductive reasoning, okay, that I got from, kind of understanding the world at large here, based on how they evaluate the company, okay? They're so used to buying at a below market value that anytime you have a company that they need the share, again, they need the shares of GME in order for them to close their position. How many of you is going to sell? I don't know. Again, only time will tell how many people are going to sell. And I don't mind. If you want to sell, you sell. That's on you, right? It's a valuation that you place on this company. And so just because you sell doesn't mean that molasses doesn't happen or anything like that. again, MOAS may not even happen. Who knows? It's just a matter of time. So I'm willing to wait for a long time in order to seek those through. But in the meantime, obviously the fluctuation of price, the fluctuation of volatility, right? I'm also doing some option as well. I have been building up some call options here. Now it's been kind of crazy for me at this price point. I'm risking a lot at this, but risking so currently I have like 10 contract on $20 strike price for August 16, and I paid around $6 for that. So around what Ron Kitty got in June 21st. And so my goal is to eventually exercise those. But if my covered call get called away, currently I have kind of close to the strike price, so that I'm not. Again, I'm doing a Pullman covered call here. It's a bit complicated for me to explain, but just full disclosure here. Of course, I'm betting on the upside here, and but of course I have my other right here, my strategy, right? So this is my long-term bag, still intact. It's not going to go anywhere. And of course, like, my projection, okay, I might be able to sell at this price point right here. Until then, these things has to come true for me first, right? Again, whichever comes first, whether it's $1,000 a share or these come first. Whichever comes first, I'm willing to hold for that one. I call that my moon back, right? So that's a long-term hold, and I have this many share. Not again. There you go. And of course, I have another account as well. That's me, my sister, both shared account. And I'm kind of like trying to monitor that one. But currently, we still have some of those shares left. I know my sister, she has to sell for the emergency. I think we sell, let's see, 36. I sell some at 48. And then, the rest was still intact. So, unfortunately, it was an emergency. She wanted the money. And if you need the money, of course, this is what the account is for. Anytime, I have it set up where anytime me and my sister needs money for any reason, we would, dip into those accounts. And again, just to survive. I think in another country, it's like the inflation is a lot higher for them, and I feel so bad for them too sometimes. But fixed mortgage versus non-fixed mortgage, right? So she has to kind of her mortgage went up close to double, in the past couple of years. So she's been kind of doing well, but not enough money to kind of have to invest. And some months she's kind of underwater a little bit, but not to the point where she's going to lose a home or anything like that. But my hope is that they're not going to raise any more rates, and so it's going to cut. But my fear is that they're going to raise another basis point. So, but I'm prepared for that as well. If they're raising rate again, she might have to dip into that account. So, which is, I hope, GME is going to go higher before that happens. But anyway, it's just my own personal thing here. Nothing to do with the company. But anyway, so my point in showing you that is that to have your own strategy, right? Whatever it is, to not over leverage yourself. And I know Moran's was showing his position as well. I'm not brave enough to do that yet. You just have to take my words for it. I show it to Lionel. Lionel could confirm, but that's all you have to go by. But trust me, when anytime I sell, I told you already, and so. I feel a sense of responsibility here, even though my channel is not that big to influence anyone, right? Anyone who got here got here because they're already in the company. They already believe in the same thing that I believe already. That's why I always said I'm preaching to the choir here. But just off chance that there might be some people who are new to this, might want to kind of, I guess, give them the utmost truth information that I got from the market as well. So anyway, and then, I make this analogy before, stock market is like a casino of some sort, right? You're here to make money, and there are people who are here to kind of speculate on the price movement, right? To speculate on whatever security that you're putting your hard-earned money to gain. The traditional sense of the stock market or the capitalism of the world here is to allow people. Oops, sorry, just blow your ear off. So sorry about that. To allow people to invest in the company and not so much speculation, right? Because I think it becomes incentivized to gamble now instead of, seeing a value in the company and investing it for the long term, right? And so I think this is why the creation of call option or option in general was kind of like I'm not saying it's a bad thing or a good thing. I'm sure it serves some purpose, but I think it's usually to serve as a way for rich people to get in and out quickly as possible, right? To create as many instruments out there to distract people, right? So that, regular people won't know what to expect. Because how many people know call option? I mean, how many people knows about option trading? Most people think that it's very risky, which is true. It is true. But if it's done right, you could earn so much money, right? And in order to do it right, it's not just 1 year, 2 years, 3 years. No, you have to learn. You have to put into so much effort in understanding it, right? And so, just like casinos, some people, know how to count card, for example, right? So it's such like you if you want to win in this game, you have to develop a strategy that works out for you. And to me, again, my strategy may not be for everyone. I do it based on my own personality here, because the trading account is for me to not feel like I'm missing out on anything, right? But also too, my moon bag is here to captivate on, or to stop me from selling way too early, which happens many a time in many security, even Bitcoin, right? Even Dogecoin. So, all of those assets that I had, well, asset, quote unquote, depends on who you are. You think Doge is an asset or not. But believe it or not, at some point I did have 500,000 Doge. Okay. And I sold way too early. And so, I've learned those lessons before, and this is why I'm here for the long term, right? At least 10 years. That's what I told myself. And again, this is, even if it go berserk, I cannot have access to this money anyway because it's in my Roth IRA. So, which means I have to wait until my retirement age anyway. So, yeah, I have a lot of time to wait for that to play out, the way that I need to. Okay. And then also too, I have my, strategy in buying, like what price point it makes sense to me so that I don't over leverage myself on this particular, bag, right? Slowly but surely it's going to go to where I think it's going to go to. I did make a mistake of buying way too much at, $60, right? Even though I think it was a good price point to get in at $60. I've told you guys this before. Yeah, I bought over here. 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 Right? Again, like little at a time, when I have the ability to do that. And it ended up having my cost average were right here, right there. So throughout all of that buying right there, I was able to kind of lower my cost average from 60. Because when I start that position right there, right? 60, right here. Sorry, let me move that circle. There you go. And so I was able to add little at a time, right? As time goes on. And my cost average for that particular account, again, old account, right? was around $45 a share. And of course, when I saw it over here, I was fortunate, very fortunate to add more over here. So all in all, my cost average is probably like around 30 now, right? 30, or even 25. So in between there. Of course, in the future, I'm going to add more, obviously. I've been adding more here. I've been adding more here, right? 20, But again, this is my trading account as well. So again, I have the ability to get in and out if I wanted to, but I want to play it safe as well, so that my capital is always protected, and all of that stuff. All right, Michael. Hey, Jesus, what's up? What's up? Okay, 67. Cost average is now great. Yes, I mean, I went heavily on that $60 price range. I would say heavily, but I think like 20% of my portfolio back then went into that. And by the time, it was down here, I was like, oh my God, it's so cheap, at the time. I was like, oh my God, I could add more right here, to kind of offset that. So I add 10% more, 10% more, 10% more, 10% more. And then they keep going down, right? So, okay, 10% more. All right, let me add more here. So again, it's just a labor of kind of like stressing out, when can I have the money to buy in? And of course, if I have the majority over here, my price, my dollar cost average down, that dollar cost average would be around here. Again, this is just my old account here that I haven't add anymore. It's this account right here. This one, my Moonback account, right? So it's gonna grow as it goes, the price of GME. And then this account right here, I just started with my sister. So that's the account that I have joined with my sister. And yeah, it's just, again, to prepare ourselves for any emergency fund that we need and all that stuff. I know it's risky to put it in GME. I get it. For most people, it might not be wise to do. But she was okay with it, because it's money that she could afford to lose, so to speak, right? And she has some time to, she gave me enough time for me to kind of manage that portfolio for her. So, but yeah, I mean, again, if you have a strategy, you cannot ever lose out on that, right? And so just know who you are. Like I said, with this one right here, which participant are you? Are you a dealer? The blackjack dealer? People are like the casino, right? Dealing the card and able to take a hit if somebody were to win. Or are you the people that maintain the crafts table, or the table for people, the chips and food, utility, whatever you need to facilitate the casino, so that gamblers out there could come out here and gamble. This is the participant as well. So you need all three in order to make the casino work. It's the same way with stock market, right? In my opinion, obviously, you could equate this to any, like option seller or people who are buying and selling, right? Again, option market is a totally different market than the actual buying and selling the shares, right? And so you could day trade both, whether option or buying and selling the shares. Now I equate GME, Gamestop, as a long-term shareholder. This one should be changed to long-term shareholder. Because why long-term? Well, you need the shares in order to benefit from GME growing as a company, right? And for option buyers out there, usually they are, betting up and down, right? If you buying calls, obviously you think the price is going to go up. If you're buying put, obviously you think the price is going to come down. So technically you are gambling in that sense, right? Now the sellers, obviously they have the ability to generate a little bit of an income, just like the dealer, right? Again, there's so many players out there. Dealers usually wins out in the end, but sometimes if the gamblers are able to hit the jackpot, right? Like Roy and Kitty, they could. I'm not saying he's a gambler. I'm sure he has knowledge. Yes, massive gamble, and he even admitted himself too, like YOLO, right? It was YOLOing. So understand who you are here. So with the gamblers, if the dealer were to take a hit because of the jackpot, yes, dealers might lose out in that particular instant. But over time, they're gonna, if you're dealing it for years and years and years, you're gonna come out ahead in the end because the jackpot doesn't happen often. Okay, just like lottery ticket. How often does people really, get to cash out the lottery ticket? Not many, right? Yes, some people might win some. If you sell it on the right time. Yeah. Like this on Friday, I was seeing my call option went up double, right? Now I didn't have the chance to cash out at that price point, but I was happy to write a covered call against it. Again, it's a Pullman covered call thing, so my share doesn't get used in that sense. Again, I don't do option over my moonback here. This is intact. Okay. The only thing that I do is, again, buying calls when it makes sense to me, when I could afford it, and use that proceed to hopefully convert into shares, right? Sometimes I'm unable to do that, but again, my time horizon is for one more month. So right now it's like, yeah. So I might be closing that, and hopefully if it goes to 30, I'm gonna try to convert as many contract as I can, just like Ron Kitty, right? Sell some of those call and convert as many shares as I can, because I don't want to lose value in that call option there. Because again, the fluctuation, it's based on market maker, right? They are the one who give you those price right there. Hold on. I'm sorry, you guys. I'm babbling today. I haven't been on for a while, so I'm so sorry. Hi, Jesus. Okay, so FOMO was real for me in 2021. Of course, you don't want to miss out on that. Now, thank goodness I did not got in after during that time, because I didn't know anything about it. Right? I was just the same way as the media was painting it. Right? Right here. Oh, it's just a short squeeze. Oh, it's just retail buying it up and all that stuff. And when it come down here, of course, I didn't think to buy. Why? Because I thought, oh, it's over. The same narrative as they want you to think, right? And then when it went back up here, I was like, okay, should I get in? Cold feet. I was like, it's just gonna come down again. I saw it over here. Now I was like, should I buy in or anything? Because I was like looking at the chart. Now, at that time, I did not know how to do any technical analysis or anything. I'm just like a small-time retailer thing. Okay. And and back then I only have like small amount of money here to invest. Well, in riskier, quote unquote, riskier asset, right? Even though I was in Bitcoin, I thought it was like everything else is risky. And so, but I started my uh, kind of investing career, quote unquote, in around 2018 or so. And again, GME was not in my radar whatsoever. I bought Ford. I bought, kind of learned the stock market coming from crypto market. Yeah, it's a wild ride. It's a wild ride. But the reason why I went back into stock, well, coming from crypto into stock, is because I did make a large sum of money from the proceed of Ethereum and Doge. Now, not much on Doge, a couple $1,000s here. Of course, regretting not holding it for a long term. Even at this price point, I probably get at least $100,000, right? What is the price right now? Because again, I have like 500,000 Doge at that time. Anyway, I'll do the math later on if you want. I'm sure people. It's just again the past experience, right? And this is what kind of developed my. This is what makes me develop my own strategy here for GameStop. Have to be long term if you want to kind of capture the most amount of value in any asset class at all. It doesn't have to be anything tangible. I mean, if you listen to people who doesn't believe in Bitcoin back then, they think Bitcoin is just a magic internet money, right? No value, nobody would buy it from you. Very illiquid asset. Now Vanguard, now BlackRock, and all of those institutions is getting into Bitcoin. Now, is it to kind of like damper the GME? Who knows, right? Again, I have my conspiracy minded here. But remember Jay Clayton. Like if you think about Jay Clayton, right, and how the Ethereum network is related to Jay Clayton, there's a thing called ETHgate. Now, if you listen to those, I haven't been following the crypto market in quite some time. I still have, cryptos, but those are just small portions that I was willing to hold for the long term still. The XRP, I still have those as well. XLM, I still have those. Loopring, I still have those. But again, it's just a couple thousand here. It's not, money that I will need. Very low, okay? I used to have more, but because of regulation, and this is why, the NFT marketplace didn't work out too well for us in GameStop, is because of that. It's a regulation. That's it. And in my opinion, we're going to come back, right? We're going to come back. Okay. FOMO. Okay. Remember, the odds are always in the casino favor. Yes, of course. And again, to me, that's why I was like making this analogy, because it makes sense to me, right? So would you rather be the facilitator of these two, right? Now, of course, DFB was this too, right? He is a long-term shareholder as well as option buyer at the right time. Now, you could equate him as a card counter, right? People who count cards, right, are able to do that. You could do that. And of course, the casino people, right? People who are, E-Trade or whatever, they're trying to kick him out because he's winning too much like how the casino would try to spot card counter as somebody who's not allowed because they're winning too much. And so it's much the same way with the stock market, right? You have a walled garden of people who are not allowed to win, right? Usually it's retail. People like us usually were used to be abused so much that we think, that's just normal. It's like, of course, casino wants to make money. You're not going to be able to. It's just for us to have fun, okay? If that's what you want to do. But so that's why I choose this way. And I choose to be, sometime I want to be this, sometime I want to be this as well. But currently I do sell option. So I do cash secure put, I do sometime covered call, but I know, again, only the shares that I'm willing to get called away. And I'm okay with that. Like, to me, I don't think it's going to dampen the MOAS at all. Not even close. Because if I learn anything within these 3 years, people accumulate more shares. It's evident by Roaring Kitty position, okay? And I'm not joking too. I mean, the fact that he was able to get from 80, was it 800? 800,000, right? 800,000 share. Oh, it's, sorry. Here we go. Number. There we go. So 800 shares to now 9 million shares. Of course, we're still speculating that he still have GME share. I know people try to say that he might sell already to buy into Shui. There's no evidence of that yet until he, update his portfolio. Still, who knows? But so how many times is that? And this is within 3 years, right? That we know publicly available information through his YOLO update. That's 11%. 11 times. So imagine you and I who've been buying into it. Okay? Like, and how many other people have been buying into it, adding more into your original position. I know I have more now than I've ever had of GME shares. So, the fact that people sell in and out really doesn't matter, in my opinion, right? Because to me, there's enough diamond-handed people already, including me. Yes, I'm going to diamond hand this shares right here until I get to the price point in which I, am willing to hold. Willing to sell. And again, for me, this is the amount, right? And I will not ever exit out of this company completely either. Even then, I might hold a couple more, couple of hundreds of shares here. So strategically, I might even hold this forever until the end of time because I have this account that I could play with, right? And so again, this would never be touched until I feel happy, until I could retire, generational wealth over here. Well, as far as like play money, this is my play bag or whatever. Yes, I'm going to have a couple hundreds here in order for me to play, the flight price fluctuation here. So I forgot where I went with this, you guys. Jesus, I have a little. Oh, okay. You have some XRP as well. That's cool. Yeah, I remember buying XRP at like 15 cents. Now only a couple $100 here. Nothing much here. I used to have more XRP because I was speculating that it might be that token that will be used to tokenize everything, right? And I think it's still true until this day because of the lawsuit with the SEC. I feel like it's been drawn out for years now, right? Now, last I heard, the XRP is not a security. Now, the XRP that is sold by Ripple could be considered security, but they have to pay fine on those. But the XRP itself, the token itself, is not a security. So we know that clarity already. It's just a matter of settlement. Of course, the SEC doesn't want to lose, right? I'm sure they're going to try to settle with the Ripple team as much as possible. Now, Ripple, again, for those people who don't know, is a company that use XRP to facilitate cross-border payment, okay? And of course, it's used to, at least was thought as a replacement of SWIFT system. Now, SWIFT is a international, exchange. Like, for example, if you want to exchange Canadian dollars into US dollars, it's a very, involved, like, you need the SWIFT system to go through. And with that, you have to pay hefty, fee, and it's slow, right? The joke is that it would be faster for you to fly the physical cash, instead of sending it through a wire system. And so with XRP, it's going to create that 3 second, like it so quick. I've used the network before. I was surprised myself. Right now, XRP is quicker than Bitcoin, and it was created because, whoever created it, I think it was like some guy, XLM guy. I forgot his name now, but he was the one who created that in response of the slowness of Bitcoin. Right, Bitcoin, because it's a proof of work. It's very slow to transact. There's only, but it's more secure. Obviously, it's just a different settlement system or consensus system to read those ledger, right? So if you want to kind of dig into the technicality of it, just know that XRP is quicker, right? And it's energy efficient that's what the being sold as, because it doesn't need proof of work in order to validate the chain. And it's not a blockchain system. Obviously, it has its own validator, right? A node of some sort. So again, there was a battle between, Bitcoin Maxi versus XRP holder. And in its early age or early stage of development, nobody wants to use XRP. They think it was the banker's coin, right? And, people hate the fact that, bankers are always ahead. And again, I don't know how much of that is actually a propaganda or just misinformation about the token itself, because it's been kind of dampen the progress of the price actions and all that stuff, right? I think people tend to not pay attention anymore when the price come crashing down. They think it's terrible. It's the same way with GME. I mean, anytime you have this long drawn out, like, people would say, "Oh, I'm so tired of holding this for a long term. It's been 2 months already. It doesn't do anything." I was like, okay, you've been here for 3 months, and you want like a gazillions of dollars? No. And to me, when it's boring, it's the best time to buy. You don't want to go buying up here. No, right here, hype, right? That's gonna, create an emotional turmoil. Even though you think it's gonna go higher, this last week, it would stress you the F out, right? Even for me, like, let's say I buy it in here. I didn't buy up here, because I was like, okay, they're going to smack it down again. And so I didn't. And even up here, I didn't buy up here. Actually, I did some cast a put, but my put has never, was converted to share. And I did kind of, X out when it's cheaper for me to buy the stock back or buy my contract back. I kind of free up the capital after that. So again, there are a couple of time when I do a above the market cascade put in order to kind of like have a higher chance of exercising. Again, you get more premium, obviously, and so the break-even price point is always lower than the actual market price. So again, it's strategic for me to do, and I've been kind of following it quite a bit. So I think, again, psychologically, I've been training myself to always buy at the red, especially for any asset at all. I remember even XRP, sometimes, if you look at the price, like it's doesn't do much for a year, 2 years, 3 years, even 4 years. It doesn't follow, the bull market of Bitcoin at all. I think the lawsuit obviously has a massive effect on people's psychology on this token. So I don't know what is going to happen. I just know that crypto is going to become big again or popular again. I think the reason why the media is just pushing AI stock is because they want to distract you from, accumulating crypto. I think, again, it's just this distraction for you to not look into the most valuable thing for them to get into. So, yeah, so much distraction is happening here. Anyway, I'm just like babbling over here. I don't know how many people have fallen asleep already, but thank you for staying. Anyway, it's gonna be a couple. I don't know how long I'm gonna be, but I have a couple more hours here. Okay, so let's look at the bond market here because it's important, right? To me, it's a good way to kind of gauge the Federal Reserve decision and of course, like people use the bond market to determine the price of anything, any commodity, any economic growth, right? Especially technology stock, right, tend to do better when the rate is lower in price. So this one is a 20 years. Now, I looked at this before in my personal life. Of course, I was cold feet over here. Hold on, let me see. So at one point, you would be able to buy this particular long-term 20-year treasury bond at at $80 a share, right? Now, this is, again, a very slow moving, well, typically, right? Depends on the volatility of the market. But at this price point right here, it was the cheapest it's ever been. Okay, so this is the value of bond. And so it seems like it would be a no-brainer to buy it at this price point right here and currently as well, because I think the yield as the market is already kind of do a head and shoulder. It could be, right? It could be a head and shoulder formation here. And so if that's the case, the rate will be going lower. Okay. Now, the value of this particular asset, when the value goes higher, it means that the yield goes lower. I know it's kind of counterintuitive here, but it's just how they express this, right? So if you're buying into this, you are speculating that, which, my personal, in my 401k, which is a very limited way of me to kind of pick any asset. So I could switch to bond or any type of ETF out there that they have available for me. So I cannot pick individual stock on my 401k. And so what I did in, let's see, May, I think I switched this. In May, I switched it all to bonds. So long-term and mid-term bond. Reason being is that I think that the Fed gonna have to lower the rate at some point, right? And it seems like the market is kind of predicting that already. From here to here, the Fed's fund rate right here is still at 5, right? So the shorter term, the 3 months right here, give you 5. And it's been lower. It used to be 5, 5, 5 here for the 12 months. So yeah, most people think that, you know, Jerome has the ability to, you know, lower the rate, higher the rate at will, and try to do that because he thinks a certain things is happening, right? But to me, he's just following 2 years. Well, I think George Garman was the guy who said that. Of course, like, I kind of agree with that based on my limited understanding of, you know, bond market in general here. So don't quote me on this. But they seemed to only have the ability to follow what the bond market is telling you. It's telling them. And so the fact that they're thinking about lowering the rate is not because they're in control. It's because the market is telling them to do that. And the 2 years is traditionally what the Fed is following. So at the current price point, obviously, you could only get this less than 5, okay, 5% currently for two years. Now the 10 years is kind of cutting close right here. When the S hit the fan, right? You want to see the 10 years go below the 2 years. When this is crisscrossing, and this is not 5% anymore, this is not 5% anymore. When it goes lower than the long term, usually the big guys out there, you know, like banks, institutions, they would pivot to get into a safer asset, right? Which is the long-term ones. Because only long-term one would give them 4%, 3%, 2%. Because the short-term one only give them 1, 2, 3, right? Whatever. And so that's the whole point. It's like currently there's a lot of money into the short-term one, which makes more sense, right? So companies like Warren Buffett, you know, Gamestop, right? would park them. Like it would make more sense to park at, you know, the lower terms right here. And you only lock it for 6 months, right? And it's the ability to use those funds after 6 months. And again, 6 months will be, you know, also would give them time to think about what company they're going to get into, right? So there you go. Hi, Manuel. What's up? Appreciate you joining in. VCDAX. What is that? Is that a stock? But anyway, so let me finish this point real quick. So I'm gonna check those out in a minute here, because I'm curious what that means myself too. So I have some time to kill, so let's do it. But anyway, so my thought is that there's a head and shoulder formation here, and so they are gonna raise the rate no matter what. Lower the rate no matter what, because the economy or the market is not permitting a higher rate increase. So can you achieve this? I don't know. Again, if it's a head and shoulder, it could goes to that steep rate cut right there, right? And so that's why my 401k would be on bonds for now until you know. And again, I'm waiting, right? I'm trying to follow big money over here, right? In my long-term one. But yeah, so as far as like GME go, right? They could park it like a short-term one right here. Still, currently for 6 months, 5% APY. That's still a good amount of time for them to, you know, think about what company they're gonna get into. Perhaps they're waiting just like any of us, right? Just like Warren Buffett is waiting for the opportunity as well. And so my thought is always like, hey, everything is just so expensive. Even the good companies out there. Look at Nike. Look at Nike. Hold on, let me see. Nike. Come on. Is that a good company to get into right now? I have my trend line over here, so I think it might come back down, at least, to the COVID crash over here. So, but at this price point, it's still a good buy. I feel like, in my opinion, obviously, okay, just not. I don't. Anyway, again, I'm not promoting anything like that, but I just think that the fact that it was kind of down from this price point, the high to the low right now, it's 50% down. Nobody say a blip about how shitty this company is, right? You never hear it from people out there. But let me see. You know what? I'm kind of curious myself. Okay, sorry. I'm kind of jumping all over the place here. Okay, so good income. That's good. Let's look at financial here. Okay, so revenue's decreasing, but still decrease in growth, right? But still increasing in nominal terms. Okay, but look at the net income. So even though they're able to increase in revenue, the net income decrease over time. Decreasing less, but look at that. See, decreasing 16%, 10%, 6%, 5%. Nobody bat an eye about how this is a shitty company. I know it's a really well-known brand. It's it's in people consciousness already that it's a valuable company and all that stuff. But it's been declining since the 2002. Now, if you look at the cost of revenue, I'm sure it's going to go up, right? It's been higher. Okay, hold on. I'm assuming. So, okay, so what is going on with the decline? So let's look at see, it went from 25 billion, 25.7 to now this, right? So if you look at the graph, cost of revenue going higher, creeping. While GME is the opposite, right? Cost of revenue coming down, but the revenue coming down as well. So, let's see what else. Operating expenses. Look at this. So income, let's see. So let's compare this real quick. Operating income from 6.2 billion to now close to 6, but I mean not too bad, but still declining. Right? Nobody's saying Nike is declining on the news to warn you ahead of time. Don't buy up here, right? Nobody tells you to sell up here, right? What happened? Oh, this is the best brand ever, right? They want you to buy up here. Okay. Again, that's why I'm like laughing. But when GME is up here, people are like, sell now or you're never gonna get your money back. It's like, okay. But again, it's like the news is there to confuse the hell out of you, right? And in my opinion, they're there to misdirect, and so now I'm saying I might be adding some here, but I will wait until $60. If in a month or so it's still basing at this particular price, I will jump in. I think this is a good price point. Okay, in my opinion. Okay. Anyway, I was looking at, let's look at some stat over here. What's going on? Okay, so 21. Oh, I feel like that's still high for me, right? I need 10. 10. Hypocritical of me because GME is like 300 right now at the moment. I'm sure it's going to be improving. So, again, GME is in transition, so it's unfair advantage to kind of look at this, metric. So compared to Nike, obviously can't compete with Nike, but we're on our way to compete with Nike. There you go. So emerging market is better, in my opinion. Like, you want to buy something outside of the S&P 500 for you to make anything at all. So now, see, this is concerning to me. Look at this. Why? Okay, so let's read this real quick. The interest coverage ratio is a measure of the ability of a company to pay its interest. Okay. So EBITDA, why is it negative? Is that bad? Yeah. So does that mean they have heavily debt? Okay, well, that's concerning for now. But also too, they're not like bankrupt anytime soon. It's just the ability for them to pay on debts. Let me see the interest payment. Okay, so negative means that they have some here. Well, okay, so expenses down here, but they have some income down here. Interest income versus, yeah, they could pay. Makes no sense to me why that one is negative. Yeah, that makes sense. There are mutual funds. Oh, okay, cool. Let me look at that real quick. Any correlation that you see? Okay, so WCDAX. Oh, one. Nope. It's not showing here. Vanguard. CA. Nope. Is that a new creation though? NTIAX. See. Maybe TradingView doesn't have that open. But anyway, so this is Nike. Now it's down close to 60%, and nobody bat an eye. So is that the time to get in? I don't know. Let's do that one. This is a large bull flag. I don't know. Technical analysis people. Yeah, it's ridiculous how much these companies already been kind of blown up already, and I'm sure I wouldn't be surprised to see this happen in the S&P 500 as well, right? I know it's one of those things where you have to kind of prepare yourself to do. And when it comes down, it comes down. You can't catch that boat, right? And so, I mean, think about how many years you see this. It's kind of like correlated to the S&P 500. If you look at it, let's kind of add this chart here. Kind of make some correlation there, huh? See? And so correlation come crashing down, right? So I don't know. See, this gonna have to come down here too. At least close to this, right? Is this a good chart to use? kind of determine diversion here for the whole economy. Yeah. So when Nike goes down, yeah, and then it's just creeping back up, using the S&P 500 to be as like a baseline determination. Or the S&P 500 would have to come down in order to, yeah. Or Nike would have to come up, right? That could happen as well to match the S&P 500. So is it undervalued? I'm sure it is, in the grand scheme of things, obviously, right? PA ratio is already 22, so it might try to fill this gap right here first before coming lower. And if you look at the earnings right here, see, earnings is higher, but yet it drops down in price. See that? Better expectation and everything, right? But again, the guidance was weak for the next year. And so what's the point of having guidance when this happens to the most quote unquote stable company ever in the whole world, right? Again, like, market doesn't make any sense. And again, price point is psychological, obviously. And so if you have a company that actually beats on earnings, yes, they missed the top line revenue by how much? 2%. Does this make sense at all that the price action drop it down to $28? It happens to other company as well, or the stock price of Nike as well, but nobody's up in arm about how Nike is a terrible company to invest in, right? But when it happens to GME over here, mind you, they come again. It's like profitable for the first time in 7 years, drop down like a rock. Shitty company. And then this happened. Crazy, right? Price manipulation, media manipulation. And people eat it up like crazy too. Even the people that should have the ability to say, hey, let me look at the balance sheet. Let me look at this one real quick, right? Nobody's willing to do that right now. So, yeah, what's next? I don't know. Again, I'm very curious to see what's going on with the guidance thing. Of course, Brian Cohen will never give you the game plan. You're just gonna have to stay tuned and evaluate the company the best way you know how. I know it's frustrating for people who wants to get in ahead on the the blueprint that Brian Cohen may or may not have, right? But I think the fact that they have money to do whatever they are able to do is already a good thing for the company. Now, I watched this, not the whole complete entirety, but this point, I think it's relevant to what GME is all about. So in this phase, I'm going to ramble on about how the company, leadership, and all that stuff. So if you're tired of hearing that, you're welcome to, X out anytime. So let me play this short clip here, and I'll be right back.
It's that they just have to continually run QE and monetize, in the long run. And so the ECB and the BOE and the Bank of Canada and the PBOC they can taper for a little bit, they can raise rates for a little bit, but they'll eventually have to go back to easing because they're also stuck in their own sovereign debt bubble.
Yeah.
And so that just means that, they'll eventually be caught where Japan is, right? So they'll get in that currency crisis where their currency starts to devalue and blow out, and they can't raise rates to fight it, and they can't sell their bonds to fight it because they own half the bond market. If they start selling, the entire bond market will fall apart. And so they're just trapped, and they'll just have to ride this ship all the way to the bottom.
If you have at least $50,000 saved for retirement right now in 2024, did you know that you can...
This just sounds like we're shooting ourselves in the foot collectively. I mean, it just sounds dumb in a way. Like, all right, so these dollar surpluses you're describing, right? So other countries outside of the US are then they're net exporters, right? So they're basically earning more than they spend, to use a individual analogy. They're accumulating dollar profits, right? But then they have to do something with those dollars. And then when you say they're being recycled, I guess that means they're buying US government debt, right? To get a yield or to get the semi-sound savings account.
Yeah.
And then this in the US is creating the effect that the rich are getting even richer. And then, so it's expanding wealth disparity even more. Is wealth disparity also being expanded in these dollar surplus countries as a result of this trade?
Yeah. I mean, if they own US assets, yeah. Very much so. I mean, the rest, if you, again, so we use Japan as an example. Japan's an extreme example, but Japan had a 30-year, stock bull or bear market and hasn't recovered the highs from the Nikkei until literally this year. It was like April 10th. It reclaimed the new highs that the Nikkei had in 1990. And the rest of the stock markets globally aren't as bad, obviously. But if you look at a chart of the MSCI World Stock Index, so all the global economies developed and emerging versus the US, you'd start to see, like in the mid 2000s, the US start to run away from the rest of the world, and it hasn't stopped. So that's why the US stock market continues to outperform the rest of the world, and will continue because of this global demand for dollars, and then the dollars demand to be invested back into US markets.
Right. So equities become the store of value in a way, right?
Exactly.
Because you're compromising the store value functionality of the currency. People have to buy something that can't be printed.
And equity seems like it makes sense.
Right. But then which is that's an illusion too.
Yeah.
Because you redenominate the S&P 500 in gold and it's like flat or down versus in dollars and it's parabolic up.
Or if you do denominate it in the Fed's balance sheet. I had a tweet that went viral, like
changes in the Fed's balance sheet, basically?
Yeah. I redenominated, there's like a Bloomberg screenshot that went viral, and it was like S&P 500 divided by the Fed balance sheet. And when you look at like the line post 2008, it's flat. Just does not, it basically does not move.
Right.
And the reason why is because, again, the stock market has basically become monetized by the Fed. And so anytime the Fed does QE, stocks run up. It's a bull market. And when they taper, things start to move down.
Okay. So when you correct the denominator, basically, you strip out the illusion, you see that the economy is actually flat. What we would widely be considered a bull market is in actuality flat. So are you then saying all of this financialization and illusion making is having a negative impact on the real economy?
I would say so. Absolutely.
How does that work?
So
So this point is going to become important. I think, in my opinion, I think if you look at it's like you could say like this is flat, right? Flatlining. Because it has to correct. And okay, so let me try to formulate this point. Hopefully it makes sense to people. So if you look at the year that this is Nike. So arguably, obviously, Nike is a good company to get into, in my opinions too. I'm not saying it's a terrible company here. But if you make a reference from a time frame, it depends on which time you got into the company, right? So let's just take in, let me see, 14. So 10 years ago, right? Of course, inflation 10 years ago, if you were to account for inflation, a lot of inflation is happening. Your buying power is lower, right? Back here. Right here, 2010. Oh, sorry, 10 years ago. Let's do this one. Sorry. I promise I have a point to go on. Now, what he was saying about quantitative easing is that, meaning that they keep the rate so low that the only place for you to make money is not to save. Okay, saving money is not actually a good thing when the rate is lower in price. So that's why the bond is so important for people. I mean, imagine if you can't even get a percent, 1%, right, out of a 30 years, 2% out of a 30 years. 10%, you know, where would you go? So you would go to the equity market, meaning stocks, any stock at all, obviously. And so 10 years ago, if you make the decision to buy into Nike, even though it's an all-time high, okay, but because the rate is so low that it's a no-brainer to buy these company at an all-time high. Even though if you look at this one, right, it's just like straight up. It come from $20 to $30, okay? But arguably, you wouldn't want to buy it up here, right? I would not have pulled the trigger if I don't understand that the zero interest rate is what, you know, give you the ability or give these people the ability to I'm talking about like people who are loading off on debt, and usually it's corporate debt and all that stuff, junk bond and all that stuff. They're able to kind of kick the can down the road. And that's why corporate debt is at an all-time high, right? And usually they want the Fed to lower the rates, and people who are in control right now, obviously they don't want to lose their asset. They want to keep their asset elevated. And that's come with the, you know, any asset at all. And usually real estate is a good amount. And that's why everything's going to go up, right? Now, but this time is different though. I think that they're unable to do that because it's just inflating to the max. Everybody is just in debt right now. And so I don't know how it's going to happen, but I think the market's going to crash when the Fed raise rate immediately, because it's been kind of accounted for a rate cut of 7 times. It's rate cut. And so people don't realize that. Remember, we've been expecting rate cut since the beginning of this year, right? And anytime people say, oh, rate cut is going to be good, the market goes higher. S&P 500 goes higher. So there's no rhyme or reason why it should go higher. It should have been down according to the news. And again, just like Roy and Kitty was saying, right, that sometimes the market misinterpret or delayed in reaction to any asset. It doesn't have to be GameStop at all. Like even here. To me, this is a good time to buy, right? For Nike, obviously. Knowing that if they're gonna lower the rates, right? Yes, initially people might panic and kind of sell, and then this is the time to load this particular company. If you know, again, you're smart, right? when the rate is lower, the S&P 500 will crash down, you know, to kind of like offset the diversion. Remember the diversion for this one. But these type of company would go up. So individual stock would be a better, like if you know how to evaluate the company from the ground up or whatever, balance sheets and all that stuff, people like that will outperform the S&P 500. Again, just my opinion here. Please don't, take. And again, like any type of stock, you don't have to go into GME here. There's numerous amount of stocks out there. I'm just high conviction in GME because of many, many different reasons. In my opinion, Nike probably would give me 2x from here, right? Instead of 10x, right? Even if it goes up in price right here back to the all-time high. So, and maybe exceeding the all-time high. So, if you were to use that analogy right there. So currently S&P 500 is up here. So S&P 500 going to come down, and these individual companies going to, kind of catch up to it, because now you have cheap money again. Companies could expand or whatever, quote unquote, right? And again, GME could do that same exact thing. Like the same exact thing. We could also leverage our asset as well when it makes sense, when it's cheaper, to do so. Okay, we're not immune to that. It's just not the time right now, and people are just antsy. Okay, so for a long-term investor, obviously we're gonna be good. Okay, let's listen in, and this is also a most important point as well. So let's listen in.
When you prioritize, financial asset prices over everything else, you change incentives in the market-based economy. So instead of people trying to figure out, how to create a new product or new good or service that would be serving other people or be solving a problem that is faced by the market, the focus now becomes, okay, how do we game the system to make more money? How do I lever up and get in more returns? How do I find a meme coin that can go up 10,000% in the next 2 years? How do I leverage my S&P, long to make double or triple what I would make normally in a year?
Right.
And so the focus now becomes financial engineering instead of real engineering, which is net. I would say it's definitely net negative, because not only are you spending time and energy on something that's just trying to extract more yield out of an existing asset, you're also taking those very smart people away from real jobs.
That's a great point. Yeah. So from people that would be real engineers instead become financial engineers, because that's where the money is. But the activities that they're making the money in are actually non-productive activities, right?
Absolutely.
Because they're not making a good or service. They're just rigging the game in their own favor to extract more yield. So that is a zero-sum game, right? That's win-lose. My win has to be your loss. But in a market economy, you can have win-win situations, right? So we're shifting the entire game away from a win-win dynamic to win-lose dynamic.
Yep. And it's wealth extracting, right? Like we said, you're stealing from savers, you're stealing from the future, you're pumping up asset prices. And you're even, like I said, in many ways, you can view it as, kind of what Alex Gladstein points out, of you're almost creating vassal states in the rest of the world, and making them subservient to the U.S. and making them invest in U.S. assets and pump the U.S. dollar up and pump up U.S. treasuries and pump up U.S. equities at the expense of their own. Because those dollars they could have used to, those excess funds they could have used to invest in their own economy or invest in their own stocks. Right. And instead they invest in U.S. because it makes sense, right? Like, if you have a huge dollar surplus, you have 50, let's say you're an individual company and you have $50 million a year in excess surplus reserves from selling to the US. You want to make money on that. Like, why wouldn't you? So invest in US assets. And that means obviously mainly things that are quote unquote safe. So US treasuries, US agency backed securities. But then you also might throw some of that in the S&P, and you might throw some of that in NVIDIA and in, Tesla or whatever. And that's what all these sovereign wealth funds and all these large corporations have been doing.
Yeah. So they do that. So this is an important point, right? So in my opinion, obviously, Brian Cohen is a value creator, okay? Coming from, a builder of some sort, okay? But people don't give him any accolades unless it's benefiting the few, okay? And especially after he got into GME, after he got into Gamestop, it seems like you have a man who already been successful in Chewy, building it from the ground up. And now when he's picking this company, all of a sudden the media just go against him, right? Because again, he's not, he's the type that creating this incentive, a new incentive of the company. It's not necessary that it's new incentive, I don't think. It should have been like this all along, where, the only way for the executive of a company to get any benefit from the company is to create real value, okay? Not to do this financial shenanigans, right? That's why stock buyback is not, completely what they were setting out to be. Right? They say, oh, stock buyback is good for the company because that means the executive is, just so bullish on their own stock. No, they're just, again, doing this financial, gymnastic in order to create the illusion that your company is more valuable than it actually is. Okay? Because you're not creating any value in the real market at all, right? And so most company has been doing this for decades already. Famously what Amazon just got $4 billion or $40 billion stock buyback of some sort, right? During the pandemic, $40 billion. Think about what that $40 billion could have done to the economy if you spread it out. To the working, their workers, right? All of them, not just the top executive who owns the most amount of shares, get the most benefit. And so with GME though, come Ryan Cohen, he's the opposite, in my opinion, obviously, right? So I don't think he's going to do any stock buyback, only if it makes sense, obviously, right? Of course, we still have $100 million left to do the stock buyback. Of course, we have that choice as well. We also have a choice to increase those amounts. So many choices to do. And again, even if we don't use those amounts to buy back the stock, just the impression that, hey, if you want to F with the stock price, we are going to, earmark $500 million towards stock buyback at any time, right? And so again, there's so many ammunitions out there that leadership could have done. But anyway, let's go back to the whole economy, the whole incentive for the builder versus the people that financing, and you could equate this to people who are buying, who are speculator, right, of this particular stock. You could also go back to the casino analogy here. Now, we have a lot of people, let's make that analogy, right? So, my opinion, the people that should have the most value added to them is the people that build the facility, the infrastructure that is needed, right? That is GameStop. GameStop should be the most people who are beneficial the most. And you're seeing that based on the number, right? The book value and all that stuff. And again, different from any other company out there. So the value created from this particular company by selling shares and all that stuff. Again, you could say because people value leadership, Ryan Cohen, right? You could say that these people are stupid. You could make that argument, sure. But people will give money where value would be created, okay? And this is what free market is all about, is that you have, publicly traded information or publicly available information about a company. You make the assessment. You think that this leadership is going to be able to deliver the maximum amount of value to you. That's why you hold the share. This is how the company should be, or at least the market should think. But, in the last 50 years, you see companies out there that are not GameStop, like NVIDIA, for example, do their own stock buyback at the top of the market. How does that make any freaking sense, right? And again, anytime the herd, right? Most people, when they hear, oh, stock buyback, that means so good. That's great because the stock price is going to go higher in price. Oh my God, such a great, incredible company. No, in actuality, there's no value being created whatsoever. Okay? It's only artificially inflated because you took the supply away, right? I dare any of these financial people, media. When GME does a stock buyback, I bet you anything they're going to be like, oh, that doesn't mean anything. That doesn't, right? Now, of course, I have principle, right? I would much rather them create the actual value rather than, buying their own stock back, okay? Use that money to increase value for the company, right? To increase the, employee compensation. That's like, again, happy employee, happy shareholder as well, right? Eventually, of course, shareholders has to, risk their capital here. That's nothing to scoff at either. It's a symbiotic, like the guy was saying, instead of creating a win-win situation, right? We are creating a winner and loser situation because it's a zero-sum game, right? if I could get the stock at a cheaper price and selling it to you at a higher price, whether it's an executive making a decision to buy their own stock back rather than, using it for research and development or, expand employee compensation, right? To give back to the employee, what do? They enrich themselves, right? And oftentimes they could even use that to, over leverage even more, to create the illusion that you have a higher asset than you actually do because of goodwill value, because of the account gimmick, right? That, company usually use in order to create that illusion. Again, the account payable things, right? Again, every company is using it. I think GME also not immune to that. However, they're able to pay off the liability with their cash on hand right now. So again, if you were to look at the biggest company out there, I mean, their account payable is like crazy, right? Let's look at. I know I'm kind of like babbling over here, you guys. I'm sorry. It's going to be a long live stream today because I haven't done one in a long time. So what the hell? I can't even spell Amazon. What the hell? I feel like I'm hungry, you guys. That's why. Okay. It's 12 o'clock. I usually eat at 1. Okay, so let's see account payable, for example. There's a lot of market gimmick over here. So see, for Amazon, they have to pay $3 billion in expenses, interest expenses. How much money do they have? Well, they have a lot of cash flow. So, I mean, they could cover that technically, but they're becoming so big that, shoot, can you even increase the value anymore without being a monopoly, right? Now, you know about how monopoly could come crashing down at moment's notice here. So look at this. So you have goodwill value of $22 billion, right? Not too bad comparing to their asset, right? They have a lot of asset here. You see account payable itself right there? Boom. $73 billion account payable. Okay. Account payable is they need to pay this back at the end of the year. So it's dangerous, right? And if you look at the net cash position, if they were to sell everything, okay, and let's see, yeah, if they were to use their cash on hand right now and pay off the debt, they would still couldn't pay off the debt or liability, right? Oh, sorry, debt. Sorry, cash to debt. So what does that mean? It's just, again, they're over leveraging themselves $50 billion over leverage. But again, it's Amazon. Obviously, they could service their debt here as long as it's still low in interest. They could do this. They could technically survive forever. But the valuation of the company is inflated based on those billions of dollars that are debt ridden. Okay. And again, this is why, the financial medias and the financial world creating these incentive, right, to have zero debt, right? So that company could go, growing. And when it's too big to grow, what happened? Right? What's going to happen? Look at this long-term debt, $35 billion. Whew. What happened if they need to refinance the debt at 10%, right? At 5% even? Can you? Look at how the amount of debt that they're kind of accumulating over the years. From pandemic to now, double. Okay, this is Amazon. Okay? And so what do you think is going to happen the next time? Right? But in the meantime, right here. So how is it that they have debt, but it's a total asset? Like, no, that should not be in a total asset. It should be a liability, right? It's ridiculous. So if you were to subtract that from this, from shareholder equity, what do you have left? You see what I mean? So again, inflated based on the long-term debt. Long-term debt is the debt that the company does not need to pay until after 1 year or more. Okay? So technically, they still have that asset, quote unquote asset. So again, look at this. Like they overblown their shareholder equity from $62 billion to $200 billion because debt. Right? Again, that's more illusion than anything, because now you're saddling the company on debt that you could not ever pay for, like $135 billion. How can you ever pay that back? How much do you make again? Hold on. A year? Okay, net. How long does it take for you to pay off that debt? So let's say you make 135 divided by the current income, net income. There you go. Okay, it takes 3 years. So you need to pay off, net income, the debt in 3 years. What company would do that? No one. So over the year, when they pay off, I'm sure they're going to kick this debt down the road again, loading more debt, or, I don't know how they're going to be able to do this, or sell up some asset in order to pay off the debt. But then no CEO would do that, because that's going to crash down the stock price. And so they don't. So they just play the game of kicking everything down the road, creating nothing, creating no real value except the illusion of quote unquote real value. So, but anyway, my thought is like, GME is different. GME is so different because, now you have a leadership that is trying to create that value, from the ground up. But not anyone would appreciate this. And the people that usually the financier of the world usually don't value this type of company, don't value this type of people, because it takes them longer to get the return that they're dreaming for. Okay, unless it's 10% every single quarter, they're not going to be able to make the money, because they need 10% every quarter to cover the debt. Most of the company out there, right? So you're overextending yourself to the point where even if you earn tens of billions of dollars every year, you cannot pay off your debt. Okay, the same way with the national, Japan, right? If you're eventually you're gonna make just enough to pay off the interest. Okay, and I don't know how many companies out there in the S&P 500 are like that. I'm sure Moran's gonna show you how many out there, but I'm sure most of them are like that, or on its way to do like to be like that, right? And so the whole economy is propped up by fake company out there. They call them zombie company at that point, but yet they call GME a zombie company when it's not, right? And even like tens of millions of dollars right now would put GME above, the in terms of ratio, obviously, better ratio than any other company, right? So we just need to kind of like slowly inching our way to the S&P 500. Then people are gonna talk about it more. But yeah, so that's the goal, right? Okay, so let's listen in with this part right here. I haven't listened to this part, so let's kind of react to it together here.
We stopped buying our meat from the grocery store, and we're saving nearly 40% with Wild Pastures, and they have a 20% off for life deal going on right now. So it's a great time to
allow for settlement and delivery of the gold.
Gotcha.
Yeah.
Interesting.
Yeah.
You've got some interesting thoughts about GameStop.
Yeah.
And so GameStop, obviously, I don't know the whole history on this. So maybe you could just give us a little background on what's happened with GameStop. Obviously, it was a very shorted stock. Retail investors started to buy it to create a short squeeze, and then there were some limitations placed on the buying, I believe. But could you just like walk us through the timeline of GameStop since all this craziness started?
Sure. So, the story really starts in, I'd say 2019, 2020, where this internet personality, right? DFV, deep fucking value, also goes by Roaring Kitty, starts investing in GameStop. And he sees this as like the ultimate, basically value play, because at the time GameStop was facing some financial issues. They had large bonds that were rolling over in 2019 and 2021 that they would have difficulty paying. And he was saying, if we have a large investor come in like Ryan Cohen, who can buy up shares and invest in the company, inject capital and turn the business around, this thing is being priced for bankruptcy when, it could be worth billions and billions of dollars. And at the time it was worth like 400 million. So he saw it as like a huge value play. So he started posting in 2020 about his position on some of the subreddits. And some of his posts started to go viral, started to grow a little bit, and really nothing came of it until August of 2020, when Ryan Cohen, who's the billionaire founder of Chewy, which is an Amazon competitor for pet food, he had 3 years previously had sold his stake in Chewy for several $1 billion, and he now came into GameStop and bought 12% of the float and got himself a board seat, and then acted as executive chairman and started making shifts in the company. And as he started buying these shares, the price started to rise. And more and more retail investors started to understand that this guy's thesis, DFV, was actually legitimate. Like, there's this large short position that's over 100% in the stock, and now the stock has like the company has an actual investor who is well capitalized and well experienced to turn this thing around. And so for the fall of 2020, we see the price start to rise. We see this company start to make some positive changes. They kick out the CEO, they shuffle the board around. He starts to, basically create a new business plan for GameStop. And then in January of 2021, the stock starts to rise, and Roaring Kitty starts to go viral on online Reddit, on online message boards like Reddit. And what this does is this ignites like a massive fervor for the stock, and the volatility starts to increase. And there's especially a large increase in options buying. Because if you think about it, this is 2021, like COVID's still happening.
Right.
Everyone's locked in their house, but everyone has stimulus checks. There's commission-free trading by these large brokers.
So everyone's gambling with their stimmy checks in the market.
Exactly.
Yeah.
People have nothing else to do. So people start throwing in some money on options and shares, and the stock price starts to rise. And soon people start to realize that with the short percentage being so high, I mean, it was in excess of 140%, that the shorts are really trapped, and we can really make them hurt if we keep buying shares and keep buying options. And so the price starts to steamroll higher. A research firm called Citron who publishes short research on GameStop, gets shut down. Basically, the founder just says he doesn't want to cover GameStop anymore because he shorted GameStop at 5 and it's already at 20. And so he's deeply underwater, and the price starts to go exponential very, very quickly. And that week, it's the last week of January 2021. So on the 25th, market open, the price rips from like $30 up to $80, then down to $40. And then the next morning, it rips up to like 120, 150, and then it falls down to 90. Wow. And that evening, Elon Musk tweets Gamestonk. And this just massively blows this thing. It was already going viral, and it just massively blows this thing out of the water. And January 27th, the price just rips up into the 200s, into the 300s. By the end of trading, it's extremely high. And there's this deluge of news stories on the financial media that are just covering GameStop. At the time, I was working at a financial services company, and I was trying to like pay attention to the price and like what was happening while I was also working, and I wasn't doing a good job of it. So I got in trouble that week, I remember, from my boss for not doing everything. But it was truly captivating because we saw the financial media in real time tell everyone like, hey, this thing is it's a scam, it's overinflated, all these people buying are going to lose their money, they're going to lose their shirt, you're just going to hurt yourself, the shorts have closed, all these news stories came out. And at the same time, there was clearly evidence that we were doing damage. Melvin Capital, one of the hedge funds that had shorted GameStop, was down like 70% on their entire portfolio, and they had to take a bailout, the tune of $2 billion from GamePlot, or from Point 72, which is Steve Cohen's firm, and Citadel. So they had to take. Gabe Plotkin was the hedge fund manager of that fund, and so they had to take this bailout and be rescued from this massive short position. And several other hedge funds were also going under because they had shorted a ton of shares at 10, and this thing is now at 200.
Right. Right.
So who knows how deep their position was?
Yeah.
And then that's when things start to get crazy. Like things go absolutely insane. The next morning, the price goes parabolic, and the buy button is shut off.
Crazy.
So let me address this real quick. So Jesus, I don't trust Peruvian or Peruvian or the Carol guy. Don't even mention private equity. So I mean, so far so good to me. He's recounting the information pretty correctly from what I remember. But of course I wasn't there in the beginning of the run. Didn't even know who Roaring Kitty was until after the run already. But so far so good as far as the recounting of what happened in GME. Now I know Ian Carroll, from watching Marantz, obviously he stole a whole bunch of, DD from Marantz, and we're all aware of that. Now, Perrin, I don't know, again, this guy, to me, have good information. I think he's probably are not even himself aware of what's happening in the private equity angle. Okay, not everyone is aware except Marantz, right? Marantz is the only one who talk about private equity in relation in tandem with what happened in GME, right? Of course, private equity is famous to bankrupt company, even to eToy and all that stuff. We all know about that fact already, but I'm sure this guy probably are not even aware of, how deep the connection was. And so, to me, as long as the information is correct, I'm willing to listen. Because again, not everybody is aware of everything that happens, and I'm sure this guy doesn't have any malintention. Well, in my opinion, anyway. You probably have different opinion here, but I'm sure he's just here trying to learn as much as we can too, right? It's like or learn as much information as possible. I know Marantz didn't like him because he was kind of talking shit about the earnings report that we just had, how Ryan Cohen doesn't tell us anything and all that stuff. And I'm sure that's just, normal frustration of people who doesn't understand what is in play, and frustration on the fact that, the price action is not ensuing or it's not going up in price. And so seeing the negative portfolio, who knows whether this guy has been adding to his position or not. But most people who've been buying at the lower price are not bogged down by the price action. And so again, this guy is, in my opinion, so far so good. The way that he recounted the info here, of course, in my opinion, this company has been going through so much transformation, so much, I don't know, like a lot of layered story here. So not everybody's going to be aware of every angle out there inside. And I'm sure, more is going to be developing. So there's a lifetime of learning experience here. So in my opinion, I think, again, people just need to kind of, learn as much as you can. That's what I'm here for. And so if this guy have a good piece of information, I'm going to learn. And of course, I'm going to verify it as well. I trust the information so far because it's along the line of what I saw as well. So let's listen in to the rest of it.
Easy.
Yeah.
And so that sounds like rigging the game, if I've ever heard of rigging the game. They literally stop people from buying it.
Absolutely. It's like, I couldn't believe when that happened. I was in such shock. I literally couldn't even, I had to go like walk outside for like 10 minutes because I was like, what the actual like hell?
Yeah.
Like what
It's
is
not
going
capitalism.
on? Yeah. Like we had them buy the shorts, like literally their shorts were, they were in too deep. We had our hand around their neck. They were shorted more shares than exist. They shorted well over in excess of 100% of the float. Some measures show 226% short interest, like insane short interest.
Wow.
Because again, this thing was going to go bankrupt before Ryan Coleman stepped in to inject capital.
Yeah.
And the price skyrocketing started putting all these brokers into default positions with the NSCC. And so the NSCC is the National Securities Clearing Corporation. It's the central clearinghouse for all stock market trades. It's the subsidiary of the DTCC, which is the Depository Trust.
Yeah, which owns everything.
Which owns all the stocks in the stock market. And they're the ones who also process all the trades. And so them and the NSCC are the ones who handle all the stock market trades and settlement for the entire equity market. And NSCC, they have a value at risk model that like basically shows how much margin a broker should have on hand to deal with stock trades that are outstanding. So like I said, because there's T+3 settlement, a broker might, like, let's say a broker goes out and like quote unquote sells like $100 billion worth of stock, but maybe they don't have the shares. So they have to go borrow the shares. But in the meantime, the NSEC says, hey, okay, we'll say that these positions are clearing, but we need to have margin on just in case you're not able to get us the money or the shares to settle this trade. And so they have margin requirements, which is called excess capital premium requirements. And in that run up, there were about $73 billion of excess capital premium charges assessed for the clearing brokers. So we're talking Instinet, we're talking charges applied to Robinhood, we're talking charges applied to Apex Clearing, which is another clearing broker. Yeah. We're talking like several other large players.
So charges applied, they had to put up more collateral.
Yes. Okay. So they were forced. They were going to be forced to put up an aggregate of $73 billion of collateral. Yeah. And the NSCC waived $55 billion worth of it during that week, during that time period, during the January run. Yeah. But what froze the stock buying on that morning was basically an order from NSCC itself to that it couldn't no longer process trades, and an understanding among the brokers that this thing was going to break the financial system. So these brokers,
and when you say break the financial system, can you expand upon that? Doesn't that just mean counterparties going bankrupt?
Yes, exactly.
Isn't that what's supposed to happen?
It is what's supposed to happen.
Take risks that don't work out and they blow up. Aren't you supposed to blow up?
Absolutely. That's what's supposed to happen. That's how the financial system, that's how free market capitalism is supposed to work.
Yeah.
But as you know, we don't live in this free market system.
Yeah.
And so as the price is skyrocketing, all these brokers are being forced to put up more and more margin requirements. And finally the clearinghouses just say, look, this thing, we're looking at our positions on across the board. Every single broker is going underwater. They have either they themselves have put on short positions or their clients have put on short positions, and they're on hook for what their clients' positions are. And so we just have to shut this thing off because this thing is going to go exponential. And like I said, that week, options were added all the way up to like $550, and the price was at $380 in pre-market and ripping to $400, $450. And we literally started breaking the settlement system of shares because we started seeing, and again, there was like post after post of this. I still have the documents. We started seeing fractional share sales in excess of $1,000 that morning of January 28th.
Wow.
When they shut off the buy button. Yeah.
That's a future?
A fractional.
Okay, fractional.
So Robin
Oh,
and
if you take it as a whole share, it was over $1,000.
No. So, like even the fraction of the share
Was
sold
over
for $1,000. One fractional share was sold in the 30 seconds before the buy button was shut off.
Yeah.
One fractional share was sold for $5,266.
And what fraction of a share was it?
It was like a tenth.
So the
the whole share was worth 5,000. So he sold a tenth for $526.
so the implied value was
$5,000 a share.
shit.
And the price.
So that was the short squeeze basically happening.
That's what was happening. And
Right.
all these banks and brokers and hedge funds were caught on the short side because they were pushing this. They were shorting it into oblivion.
Right.
Shorting more shares than exists, which theoretically shouldn't be possible.
Sure.
But it is possible because of naked shorting, FTDs, and just rehypothecation of shares.
So what does that mean? That means you have to borrow a share and sell it to short it, right? But
Yeah.
they had borrowed more shares than exist and sold them because they weren't actually borrowing the share. When you said naked short,
Yeah.
the other terms I'm not sure, but how do you short more than 100% of a stock that only 100% exists of?
So the way you do it is you sell a share and then you fail to deliver the share.
So you sell it to two people basically.
Yeah. You tell people that you have sold them a share,
Got
but
it.
in
It's a
reality you haven't
misrepresentation.
told them. Yeah, misrepresentation. And the FTD problem is something that's also not really well discussed in traditional financial media.
Yeah.
Every single stock in the world has FTDs, but certain stocks, especially ones that are right before bankruptcy or being heavily shorted, have an excess amount of FTDs. And this has been documented for decades. There's one case I covered, I remember in 2005, an investor named Robert Simpson bought shares in a Nevada-based real estate company called Global Links. And Global Links at the time was trading at like a few pennies a share. And he bought, with his capital, he bought all the shares that exist. Actually, he bought more than the entire float. So he bought 111% of the float of the company. So the company had issued, let's say 10 million shares. He bought 11 million shares.
Right.
And he was like, first of all, how is this possible?
Yeah.
I was able to buy more shares than exist. But he moves them all to his brokerage account. And he's like, okay, I did an ACATS transfer to my brokerage.
Yeah.
They're all in a cash account, which means they can't be lent out. So tomorrow the stock shouldn't trade. Like it should just cease trading.
Right.
And in the next 2 days, 50 million shares trade.
50?
50 million. 50 million in the next 2 days. And he went in front of Congress and basically laid this out. This was part of the SEC. This is part of the reason why the SEC did Reg Show, which is their laws, quote unquote laws against, abusive naked short selling. And which they conveniently don't enforce very well. And this was like a huge controversy at the time. There was, congressional hearings about it, and there was quote unquote some action made, but it didn't really make an effect. And that problem of hedge funds and market makers naked shorting a stock right before it goes bankrupt never got solved. Because if you think about the settlement system, like when you short a share, you sell it into the market and then you're expecting to buy it back at a lower price, right? When it falls in value. If it falls to zero or gets delisted, you never have to buy it back.
Right.
So you're selling
Made all
shares
that
that
money.
then you just get to pocket all the money.
Right.
And so when a company is headed towards bankruptcy, or like let's just say that there's a company that has some mild financial issues. If you start shorting the stock and start reducing their equity, that starts reducing the options they have as a corporate board of actions they can take to raise capital.
They can't borrow.
And then they can't borrow, and then now they can't raise equity without lowering their stock value further. And then analysts downgrade them, less investment flows. People don't want to do business with them. Like
customers start jumping ship because they're scared.
Exactly. And the thing starts to die. And then all these shorts can just pile on harder and harder and harder and drive it as hard as they can into the ground.
Right.
And, there's
But if it
case
goes the
after
other
case.
way, that's the short squeeze, right? Where
Exactly.
they have to go buy it back in mass.
Exactly.
And that can drive the price higher. Yeah.
Exactly. And they did this. There's another case called CMKM Diamonds where they did the same thing. They shorted a diamond company basically out of existence, and I think it was the CFO and the CEO had multiple meetings with the SEC, and they said, look, we've had more, according to our own ledger, our shareholders own more shares than exist.
Yeah.
This shouldn't be reasonable.
Right.
I want to know how many shares each broker has to figure out which broker is naked shorting. And the SEC agent told him point blank, we can't do that because that would break our the faith in our settlement system. So we're not going to give you that information because of that. So this whole thing it's
inherently fraudulent.
Yeah. It's a massive, massive fraud.
How do we fix that? I mean, does Bitcoin have anything to do about that? Or is it just a matter of these delivery needs to be able to be demanded and enforced, right? Rather than prevented through, I'm not sure how they're preventing delivery. Is it just a matter of the T+3 delivery is, that's the law? Or how does the free market fix that?
Well, the free market, I mean, we're talking, this is a difficult problem to solve, right?
Yeah.
Because Bitcoin is money and it's not a security system.
Sure.
And when you're talking about a system that settles securities, you need liquidity, you need speed of transaction. So you need to have, it's almost beneficial to have a centralized database. Right? Maybe you could have the payment handled in Lightning or something like that, but you would have to figure out a way to allow the system to have very fast liquidity.
Is this more of a
transaction
property
times.
rights issue? Because when someone's double selling a security, that's like someone's property rights are being violated there, right? Like you sold it to someone, but you didn't actually sell it to them. So is it a matter of governments not enforcing property rights, basically?
I think that's basically it. They get, all these financial firms get slaps on the wrist.
Yeah.
Massive, just fines as a fraction of the amount of money they made from the naked short selling. And when they are caught, even sometimes they're even able to weasel out of it with just a warning, basically. Whereas what it should be is if you're caught naked short selling, it should be cut. You should be cut out of the system entirely. They should say you're banned from trading ever again. You're not allowed because you're committing fraud. Yeah. If you print money, if you print dollars and sell and give them to people, you go to jail because you're committing a crime and you're creating fraudulent money. If you're creating fraudulent shares, the same rule should apply.
Right.
Because you're essentially, it's kind of like printing money because you're printing fraudulent shares and selling them to people.
Yeah, because if you print a share, you're double spending company capital. If you print money, you're double spending global capital, basically, right? Yeah, because money's a claim on cap. Yeah,
exactly.
So it's a misrepresentation or fraud.
Yeah. So I think that the problem is definitely on the enforcement side, but it's also on the side of the DTCC and the NSCC and the clearing corporations, right? Because
which is a scam.
Why should they I think that they obfuscate all these terms. They use T+3 settlement and they use all these technical jargon, when in reality all they have is a massive SQL database.
Yeah.
And this database just tracks, which broker has how many shares in which name. And to me, it should be very easy, on the face of it, looking at the problem, it should be very easy to say, okay, this broker, this individual said that they're selling through this broker to this other broker. Yeah. Does this person have the shares? Yes. Okay. Instantly subtract from their account, add it to the next person's account. Oh, they don't have the shares? This would be an FTD? Yeah. No, it's not going to be allowed.
Right. You can't sell what you don't have.
Exactly. We can't sell what we don't have. And then by nature of that system existing, it would be impossible basically to short a company over 100% because you can't borrow more shares than exist and to sell more shares than exist. So the short interest would be capped and abusive short selling would be impossible.
Are the regulators giving these financial institutions slaps on the wrist or letting them get away with warnings because of regulatory capture?
Absolutely. Okay. Absolutely. I think so. If you look, if you just look at SVB, for example, the recent bank that failed, one of their, I remember I did a whole write up on it, but one of their managing directors was a former Fed employee of the San Francisco Fed. One of their director of credit risk was formerly at Lehman. Their head of legal was formerly SEC. There's a revolving door between Wall Street and the regulatory agencies that guide them. And FINRA itself, which is one of the main regulatory bodies over the financial industry, is what's called a self-regulatory organization. So the members that make up the rulemaking body in FINRA are the financial firms that are being regulated. So they're making the rules and enforcing the rules on themselves, and so they have no incentive to actually kick anyone out of the game, no matter how abusive their transgressions are.
Right.
It doesn't matter. So they can just keep doing this, and this is what GameStop really exposed for so many people. I think, it's a financial movement in one sense, but it's also a social movement, because what was revealed to everyone in real time was like, oh my God, like this system that we thought existed was a free market, that we were all buying stock and allowed to buy stock in a free market and punish these short sellers. And the short sellers should know, like, logically, you're doing a very high convexity trade. You're shorting a company with there's a limited profit that you can, because the stock can only fall to zero, right? You can't go negative. So if it's $1,000 a share, you can make $1,000 a share of short profit. But there's unlimited downside, I should say. The stock can go up, which means you can lose infinite money. Obviously not technically infinite, but there's just
lose all
very
your
high
equity.
losses. And so they should realize that there's the risk for these trades, and you should hedge for them. And you should be prepared that these things can happen and you can blow up. And we were blowing up these funds in January of 2021, and they turned off the buy button to save the clearing brokers and the prime brokers and the hedge funds and market makers who were shorting this company.
And so then people are awakening to the fact that this game is rigged. It's not fair, equitable. There's rules that are being unevenly applied, right? This one group, even the bailout itself, right? I don't, was it printed money, or were this private bailouts?
It was, okay, so for Melvin Capital, the hedge fund, that was a private bailout. That was from Point 72 and Citadel. But when we're talking about the NSCC, they didn't they didn't receive a bailout in the traditional sense of like the Fed having to do an injection. But they waived all the capital. They waived 75% of the capital, the collateral charges that should.
Gotcha.
So according to their own risk models, all these trades hadn't cleared. They would have had to hold X amount of capital. And like I said, during that period, the week and a half or whatever of January 2021 run up, they waived $55 billion of the charges.
And so that is corruption by definition, right? Because the definition of corruption I like is the uneven application of rules, right? So they have an application of rules per their risk model, but then they waive that for these individuals because of this revolving door thing, right? This is hey, a guy calling his buddy saying we're in a tight spot, pulling some strings, calling in some favors, and then he gets these collateral requirements waived.
Absolutely.
So that's basically corruption. So that's what people then was that the bigger deal about GameStop, is that people were waking up to the inherent corruption in the financial system?
I think absolutely. And look, we didn't figure out this stuff about NSCC until September and October of 2021 when the reports came out. Like the House Financial Services report actually showed that the NSCC had done this. At the time, all we saw was Robinhood shut off the buy button. We all got robbed. Like, screw the system. We're all like, it's corrupt and it's broken. And, it wasn't until, I think it was like the next day when people started to realize that it wasn't just Robinhood that had cut off the buy button. It was like, I think 60 other brokers and even international brokers. And the reason why is because the clearinghouses themselves were being told to turn off the buy button. We're being told to not.
And who was making that?
Close only.
Who was making that instruction for them to?
It's still opaque. Like, I can't give you like a single name, but I would say the people that are involved are obviously the heads of the DTCC and the NSCC, the large conglomerates that run the clearing operations for the entire U.S. stock market.
Well, did the GameStop movement?
I went on, so I haven't listened to this part, so that's why I was like, apologize to the content creator here. But it's such a good information to get into. Like, if anyone who wants to learn more about the company, and let me stop it at this point here. I know Giga just got in, saying hi, and of course Lynn just got in too. Of course, I'm kind of like on my way out too. I know, Lynn, every time you're here, I'm on my way out. But let me kind of like address this point real quick here, and I'm sure Jesus over here also mentioned this as well. Perhaps he's going to mention it later, but I'm not going to play anymore. You guys could go and check out this particular, segment here. It's like 2 hours of content here, so might be too long. But this is the particular one where he was talking about GameStop in particular. Now the NSCC thing, the Settle Clearinghouse, Marantz did a show on this as well. I think he had why the buy button was removed. So of course it's a lot of conflict of interest for these people to be, buddy with each other, and they have to facilitate this. It has to be a corruption thing, otherwise they would be blown off, right? Now, of course, in a free, fair system, somebody should have gone to jail for this, and somebody should have gone to the point where it got shut off. Like, none of this, again, it's going back to the incentive point of things, right? You're creating the incentive for people to do crime in order to get paid. If they don't do crime, they don't get paid. Okay? And so, and when they got caught, what happened? The reinforcement or the enforcement agency, which is the SEC, the DOJ, should have got involved and put these people, in handcuffs. But there's no action on that. Because again, most of them probably got elected because of the money that is gotten rushing around, donations, campaign donations, right? And of course, again, their portfolio is probably tied up to that as well. Congressmen, people, whatever, they earn money and then they put into this private equity, I bet, right? And this is why, again, private equity is so entrenched in our culture or in our financial system, because that's how they make money. And the only way that they make money is to incentivize people to, okay, hush, hush, when things are going back, hush, hush. And the media is the mouthpiece to that. Right? And for anyone to uncover this, it takes a team of people, like the whole society to realize this. And even then, like after 3 years, you still have people who think that we're stupid, dumb, nothing, And I know I hate to go to that, rabbit hole. Obviously, it's going to be very negative here. But I don't know how to solve it. It's very simple. Like the solutions to this particular problem is very simple. It's to stop naked shorting. It's to stop, again, to not allow, okay, if you want to allow that, then have the risk portfolio, have the ability to make that executive decision to wipe these people out. If you understand the risk, if you want to short a certain thing nakedly, otherwise, you have to agree to be blown off when things are not going your way. Okay? And these people should not be allowed to use the customer funds, just like how the banks is using people's deposit money in order to go to other investment that are risky, commercial real estate or whatever, or safe asset like treasury bond, for example, right? And again, this is why the banks went under. Some of the bank, right, First Republic, whatever bank, they use depositor money to buy into treasury bond, thinking that the Fed's gonna lower rates eventually. But when they don't lower rate, what happened? The value of the bond goes down. And then now when people needs their money, it's like, hey, I want my money. They don't have it. Because the bank is like, hey, the value of the bond, just like I show you, it was like down 50%, right? If you look at the long-term treasury bond, and this is what, again, this is supposedly the safest asset in the world, okay? And that's why the bank does it. In their mind, they're like, oh yeah, of course, the Fed's going to lower the rate. They don't know how to hedge. And these people listening to other people, like 50%. So again, just because you're like institution doesn't mean that you're the smartest people in the world here. You're just listening to other people around you. rubbing shoulder together the same way. People who short GME the same way, they're just rubbing shoulder together. They're like, hey, I'm shorting GME. It's like, oh, how about you? It's like, yeah, I have 10,000 shares shorted. Oh, I have hundreds of millions of dollars shorted. It's like, of course we're going to do that, right? Again, they're just following each other to the grave in this, respect, obviously, thinking that GME is going to go bankrupt. It's like one of those things where if you saw the blood, you're going to try to game the system because traditionally, when, companies go bankrupt, people don't tend to hold the share, right? And that's why the narrative of this company is going under is still prevalent till this day. Have you ever thought yourself, like, why is the sentiment is so strong to these people, or human psyche, right? That even till this day, people think that GME is going bankrupt. What the F, right? In my opinion, obviously. I know, the media is very strong in convincing people of that facts. But again, let me go back to my original point here. Eventually, the market will price this company the correct way because there's so many people are in it already. People who have been in this company knows the value of the company already. If you've been here for 3 years, just like, the gentleman recounting the whole saga of the whole company history here, you understand what this company has been through, what is about to come, okay? Because of the macro economy, people don't have the money. Even they're trying to convince you that all of these companies are valuable, even though they have loaded off on debt. Okay? Commercial real estate is not doing well right now. Why do you think that is? Why do you think commercial real estate is being sold for pennies on the dollar? Understand that. And so, again, this company has been through so much. And the fact that the pricing of, right now, the price is still wrong. The company, the market has not waking up to that. The masses is still thinking that this company is only worth $4 book value. Okay? When we all know, I'm sure the elite is out here, all of us knows that the company has higher book valuation, which is $10 a share. And so if people stupid enough to sell at $20, $26, in my opinion, obviously, right? Not financial advice. We're going to be able to load it off at this particular valuation too. So just so you know, currently, this is the current valuation, right? If it's at $11, that means it's 100%. If it's at close to 20%, at $20 a share, that's 50% equity. And at the current valuation is 40% equity. And so it depends on the price point in which you got in. Now, I'm so sorry if you buy it up here. Then you get less of the company if you buy it up at, $60 a share also, or even $80 a share, right? So if you were to do that valuation, let's see, let's kind of like do that valuation real quick. Divided by $80. So if you buy it at 80, you only get 13% equity of this company. And so, of course, for people who've been loading up over here or even down here, it's going to be sitting pretty very, very soon, obviously, right? For these people to 10x, GME would only have to go up to $100 a share. Can it? I think it's gearing up to, right? Due to the settlement system, due to, the economy, I don't know, collateral basis thing, right? People going to get blown off here. Who knows? I don't know what's going to happen. I just know that the company is doing better. So I'm just going to go off of that. We were buying at $10 a share. And now that's the book value, obviously. Yeah. And again, when I bought in here, I was like, that's a no-brainer because it was actually before the share the dilution, right? It was 50% equity. So technically at this price point, you are actually even at $26, you are actually buying it at $13 a share, right? So it's almost like you're getting the company at this valuation right here, all right? So there you go. The only criticism that I have for myself, like, doing this is because during this time, obviously, is not having enough money to buy down here, right? And of course, the same sentiment that I have today is that currently I wish I have more money to buy into this valuation. So, there you go. But anyway, I'm gonna sign off. Appreciate all of you for coming in. I know it's been a long kind of live stream here, probably like more than 3 hours, right? But it's important information. It's important information, obviously. Like I said, I haven't been on for a while, so I'm kind of making it my hours over here. But yeah, God bless if you are here till now. But anyway, I will let you go, and I will see you when I see you.